Hello everyone, a very good morning to you all. Welcome to the second lecture of Performance Management paper of ACCA. I hope all of you are doing well. If you have any queries from the previous lecture, please feel free to ask. All right. So if there are no doubts, we will begin from where we left off yesterday. So we talked about MIS and data analytics in our class yesterday. And few topics were covered, and when we left, we were talking about hacking, right? We talked about hacking and what are the different measures which are employed by various organizations. That is what we covered in the end. Now, let's talk about an example here. Hitachi, you would have heard about the brand. The 2016 Indian banking hack compromised 3.2 million debit cards due to malware in Hitachi Payment Services ATM network. Major banks, including SBI and ICICI, were affected. Unauthorized transactions occurred globally, prompting banks to block and reissue the cards. The incident highlighted significant vulnerabilities in India's digital banking infrastructure, driving enhanced cybersecurity efforts. Right? This is something which has happened in the past. So there was compromise in Hitachi Payment Services ATM network. All right, moving on to the next topic, which we have here is encryption. So we touched upon it slightly while we were discussing one of the earlier topics. What is encryption? As I told you the example of, you would have seen on WhatsApp that the messages are end-to-end encrypted. What does it mean? That only you and the recipient will be able to decipher the message. No one else in between will be able to understand it. So encryption is a method used to transform readable data into an unreadable format, ensuring that it can only be deciphered with the appropriate decryption key. So there will be a password. So just to give you a very simple plain vanilla example, okay? Something we might have done as kids. So let's say we have an alphabet from like A, B, C, D, E, F, G, H till Z, right? What we used to do as kids were what? We would change every letter with its next letter. So let's say if I have to write a secret message, A gets replaced with B gets replaced with C gets replaced with D. And I hope you will understand that if I write any normal sentence using this key, this is a key. What is the key? A being replaced with B being replaced with C. That is a key. Now, if I write any message using this key, what would happen? The message will all look gibberish, doesn't make any sense. But I have passed that key to the recipient. Whoever was supposed to receive that message knows that this is how I have to decipher it. So what he or she would do, that he would change that letter back. So let's say B will get changed back to A, C to B, D to C. And in this way, he will be able to decipher the message. No one else would be able to do it. So now you read this statement again. Encryption is a method used to transform readable data into an unreadable format, gibberish, ensuring that it can only be deciphered with the appropriate decryption key. This is a technique which prevents unauthorized access to data, whether it is being transmitted or stored. Understood? The process of encryption involves two main components: an algorithm, the procedure used for encryption, and a key, a secret numerical code, usually made up of letters, numbers, and symbols, to convert the encrypted message back into the original readable form. The matching key must be used, right? Encryption plays a crucial role in protecting sensitive information such as credit card details by ensuring that only authorized parties can access and understand the data. While it helps address issues of authentication and data integrity, decrypted information may still be vulnerable to hacking once accessed by the receiver. So once the deciphering has happened, once the decryption has happened, still any person can hack that data, right? If he gets access to the key, then also it is possible that anyone who has got the key can hack it. So still there is vulnerability. It is not like foolproof. There is vulnerability, but it gets reduced in the process of transmission at least. Then software audit trail. An audit trail is a record that captures essential data about each transaction. In a software context, an audit trail may include details such as user and terminal identification. So if you know, and I've used SAP on any such, ERP software, you would know that the account using which the entry has been made, that also gets recorded so that anyone is able to trace who passed the entry. Just giving an example. The time and the date of transaction, transaction type, quantities, values, and cross references to related transaction. Example, invoice number. That would get mentioned in the entry also. The purpose of the software audit trail is to document information about online transactions, allowing the transaction and its history, both backwards and forwards, to be inspected and verified by third parties, such as internal auditors and system analysts. Is it clear? So audit trail means that any transaction that you are doing on the software, that gets recorded. And necessary details that which could be customized from one organization to another, that gets recorded. Is it clear so far? Anyone having any doubt? Clear? All right, perfect. Next, testing systems security. Implementing security systems is pointless unless they are proven to work effectively. While using in-house staff to test the system is an option, it may not be ideal, as they could have a vested interest in the outcomes. So, some sort of security system should be there, but the implementation should not be done by the in-house people because they may have some personal interest in it. They might be drawing some sort of unregulated benefit out of that system security lapse, right? So many external organizations, such as large accountancy firms and consultancies, provide attack and penetration services to evaluate the robustness of security systems. So basically what they will do is that they will try to attack the system, okay, and see whether they are able to penetrate it and hack it. These services involve attempts to access the computer system in two primary ways. One is physically. This includes attempts to access the physical surroundings of the computer system, including the computer room itself. And logically, this involves efforts to penetrate the system directly through methods such as dial-up connections, that is, connecting through the internet, tapping into external data lines, and obtaining access codes and other information through some sort of hacking technique. Like one of the techniques we saw yesterday. Remember social engineering? They will, perceive as being someone else. Okay. So these are the different ways in which they can hack it. It is known as what? Attack and penetration services. Who provides it? Accountancy firms and consultancies provide it. What does it mean? They make a deliberate attempt to hack the system to understand the robustness of security systems. Right? And that can be done in any way. It could be through physical access or through logical access. I hope this is fine. Pretty simple, right? All right. Next section is sources of information. Please pause me wherever you have any doubt. What is dial-up connection? Let me show you something on that. You might have used it also. Let me see if I can show you in a good video. So basically, your modem. Have you used internet using a modem? Simple Wi-Fi router also it uses that, no? Like it is using internet technology to connect to the web. That is what dial-up connection is. Earlier, we used to use this term with respect to modems. Mhm. Now getting it. Anyone who has used modems? So modems used to connect to the internet using a telephone line. Remember, we used to have a telephone line and then that will get connected to the modem and that will be used to connect to the internet. That is how it used to work earlier, right? So that is what dial-up connection is. Okay, let me write it down in the notes also as so that you can recall it later. It is a way to connect to the internet using telephone lines. Many years back, some 5, 6 years still back, when we used to have this modems for connection to internet connection. It is a technology that allows you to connect to the internet using a standard telephone line and a modem. All right. So I've written it here. If you want to read it later also. Basically, a way to connect to the internet. Sources of information. Again, information could be internal, information could be external. So the principal internal sources of management information within an organization include accounting system. So from where can you get information internally in a company? That could be through the accounting system. It provides data on costs, revenues, and sophisticated outputs like product cost via activity-based costing. All of this you're going to learn in the syllabus. Then inventory system tracks inventory movements, quantities, so you can know about inventory levels from the inventory softwares. Then payroll systems would be there. It contains employee data by department. What is the salary being paid to each employee? That would be captured over here. Purchase processing system records supplier information, invoices, costs, and transactions. Then sales processing, customer purchases. See, customer purchases is what your sales, right? So records customer purchases, preferences, and can analyze sales by customer or product for marketing insights. See, sales data is used very extensively in a lot of ways, to understand what marketing technique can be deployed to target these customers. So I'll tell you an example. So once I shopped on one of these websites. You might have heard Plum, or you might have used the term. Heard the term MKFE. Okay, I once shopped from it, and every time now that they get active with a sale, I will somehow, one way or the other, see its advertisement on any of my social media platforms. Okay. What does it show? That they are using the sales data of theirs to, for marketing insights. How should you market the customers? So that is what is done at the back end. And mostly these new age companies, they use it very extensively. In fact, I've also worked on such, marketing projects while, being at Flipkart as well. We would see what sales data is there, who from which country, I mean, which city is, purchasing what. So we get all of those insights from the database, right? So customer information remains confidential, but we get the trends from the data. You would see that there is a app called Cred. Anyone knows about it? Or you might have used also. So what is Cred doing? It is thriving on purely data. So it says that it is a credit card bill payment app, right? But what is it getting by paying the credit card bills? And in fact, it gives you some sort of rewards, monetary rewards also, like 3, 5, 10 rupees also you get while paying the credit card bills on that app. Why is it doing it? It is doing it to get access to your credit card statements, to understand where you are spending your money. And then accordingly, this data is used for multiple activities, and and then it gets sold for, not data is sold, or it gets used, I would say, for targeted marketing campaigns. So if you are a customer who is very active on, let's say, shopping, so you will, Cred will approach such partners that, okay, I have such active user base. Do you want to do a targeted campaign on Cred for them? So this type of activities can be done on the basis of sales data. But the example, Cred example, which I've given is external information, which is not covered here, but just giving you context on how sales data can be used for marketing insights. Okay. Qualitative information systems aggregate customer surveys or qualitative data for customer satisfaction analysis. While each system serves its primary function, their data can be utilized to provide additional valuable management information. For instance, sales system data can be used to analyze sales trends by customer for strategic marketing decisions. Okay, so this is very critical piece of information. Now, external information is often used for strategic purposes, including insights into competitors, markets, and the economy. Primary information, it is customized to meet the specific needs of an organization. Examples include conducting market research for new products. So if you're planning to launch a new product, you may, do a market research for that to understand whether the product will be acceptable to the customers or not. Then gathering information on competitors' pricing, how the competitor is gonna price its product. And this is done extensively by any company. Okay. So, like in the liquor industry also it happens. Like we have a certain segment of brands. For example, Imperial Blue brand, that's in a value segment. It's pretty cheap. Then comes the deluxe segment, that is comprising of Royal Star. Then comes premium segment, which is the blender's price. So in each of these segments, okay, we also keep tracking how the competitor is pricing its products. For example, like in the value segment, I mentioned Imperial Blue. Now the competitor, Diageo, has two products in this particular segment, and that is your McDowell's and then Officer's Choice. So what does it show? That, what we will be doing is we keep actively seeing what is the price that the competitor is keeping for these brands in the value segment. Similarly, for different segments, there will be different brands of the competitors. And this is actively tracked because it affects the market share of any company or any brand also, right? So that is about primary information. Secondary information is, it is data produced for general use. So you might have heard these terms, primary, secondary, in your class 11, 12. So basically, primary information is the information which you have, it is customized for yourself. And secondary information is that it is produced for general use. It is standard and it has to be customized for use. Okay. Examples of secondary information include government statistics, country reports from consulting firms, then business directories. Yes, first hand and second hand data. Not exactly second hand in the way that secondary information is being prepared for everyone. And then you can pick and choose whatever you want to use. So country reports from consulting firms, business directories detailing other organizations' activities. So a lot of reports, they come out in the public now. So that can be accessed. Trade magazines and similar publications that provide valuable information on external factors affecting a business. Okay. So that is about the sources of information, which could be internal or external to an organization. Internal would be accounting system, payroll system, inventory system, sales system, purchase system, and your information system overall. And external could be classified into two parts, primary, secondary. Primary is when any information is customized as per you, and secondary information is general use it is, but you can pick and choose whatever you want in your analytics. Now, use of information in control. What's wrong on me? Yeah. So, use of information in control. Different levels of management use management information for control purposes. Remember the different levels of management we studied yesterday? The strategic, the tactical, then the operational managers, right? So different levels of management use management information in various ways. Strategic managers, they focus on long-term planning and control of the organization. They require high-level information such as actual profits by division and market share. Strategic managers compare this data with long-term plans and take corrective actions if objectives are not met. So what will they be looking at? High-level information, actual profits and market share. So that is the type of information strategic managers use. Next is tactical managers. They are concerned with running the organization efficiently. They need more detailed, usually internal information. Key information for them includes actual costs against revenues, okay, and then monitoring the quality. Then what type of information operational managers will be using? Very transactional information. At a minute level, they will be using the information. So they'll be using transactional information. Entry level data. Like, what has been the inventory in, inventory out, what has been the damage, all of these things transactionally will be seen by the operational managers. Next, we have accounting information requirements. So this section is done now about information that is complete. Now, next section which we have is accounting information requirements. So strategic planning and control information. Information for strategic planning typically involves high-level objectives. Rihanna's a doubt. Let me read it out. Can we say tactical and operational management will be using internal information? Absolutely. So you're right, Rehan. The strategic managers, they focus on internal as well as external data. Whereas tactical and operational managers, they will be more focused on internally generated data. You're right. Strategic planning and control information. Information on strategic planning. involves what? High level objectives. What is it that we want to drive in the next 5 to 15 years? So we're talking about what? Strategic planning. So that is the top tier of the company. They will be relying more on, as you said, Rehan, on external information. Yes? Ad hoc data for special projects and forecasts covering longer time frames. As I was mentioning, they have a long-term perspective of the organization. So the type of data which they require also will have, longer time frames. So for example, they might ask the internal teams to prepare forecasts for the next 15 years. And then the teams have to do that in that working, find out where the company would be in the next 15 years. Examples of strategic planning information. So this is planning information. And this is control information. So what are the planning information? Economic and market forecasts, where the economy is going to be. Then competitor analysis. Strategic control information includes what? You will break down the profit to understand where, whether we are heading in the right direction, whether we are going as per the plan. You will try to see. You will break down the profit as per segment. External factors affecting the organization, market studies, then investment appraisal. So they will keep looking at these informations to understand whether we are on track as per the economic and market forecast, the competitor analysis. Okay, so this is what strategic planning. This is about strategic planning and control information. Next, we have tactical planning and control information. Here we have operational planning and control information. Tactical planning and control information, let's see. Information for tactical planning. This is for tactical control measures. I hope you understood how the data is being presented here. Okay. So information for tactical planning typically includes what? Detailed data. So profit and loss statements, analyzing revenue and cost by division or product. So very in-depth data. Because senior management will be looking at very over level data. They'll not get in-depth into the P&L. But the tactical managers, they will be looking at detailed data, mainly internal information, right? There we have external information focus, but here it is mostly internal with some external data. Regular reporting, monthly analysis, budget preparation, variance analysis, forecast covering periods up to 12 months. So here it could be 5 to 15 years. Here it could be mostly around 1 year, 1 to 3 years horizon. The annual budget is a key example of information used for tactical planning. Tactical control measures include how will they check whether we are on track as per the plan. So sales analysis by product, customer, location. So they'll break down that sales information. Then inventory management, then cash flow projections. So this is something that they will look at. Then operational planning. So operational planning, I told you it's you're going to look at the transaction level data. So operational planning relies on transaction-based internal data, focusing on very short-term periods, maybe like a weekly report. So examples of operational control measures are variances. You'll be looking at the cost variance, revenue variance, then levels of receivables and payables, salary information, customer complaints tracking, output records, and production metrics. So this is the level of information which each level of management uses. Is it clear, everyone? And of course, operational planning will also be based on internal information like tactical. Okay. So the four main types of information systems that supports the different levels of an organization may be summarized as follows. So the different types of information system. So one would be transaction processing system. Who would be using it? Think about it. Which level of management would be using it? Transaction processing system. Who would be using transaction processing system? So these are the different four main types of information systems, right? Transaction processing system would be used mainly by the operational managers. Everyone please participate. Then MIS, we learn about each one of them. Okay, I have in-depth discussion over here, but just from the name of it, you'll be able to understand. Management information system, decision support system. This will be used more by the tactical managers, and executive information system that would be used purely, mostly by the strategic level of management. Now let us understand what each of these systems really mean. But this graph or this diagram is something which you should actually remember, that which level of management uses which information system, because it is regularly asked in exam also. Like transaction processing system would be used by which out of the following. So you'll have to select operational management. So this diagram should be marked as something which is important. So transaction processing system data is primarily high frequency, very regularly updated. It's high frequency and short term, daily updated or even at every hour. So it is a high frequency and short term with automated processing and minimal human input. So for example, the sales that you're making is getting automatically punched into the system. So those types of interventions are done in transaction processing system, considering the high frequency of it. A TPS collects and stores transaction data, which may include controls information also, because we saw, right, level of receivables, payables, then customer complaints. All of these are also recorded in the transaction processing system. A transaction occurs when goods or services are exchanged for payment. Examples include purchasing an airline ticket from an airline's website. So it would be the airline company's PPS. Please understand, it would be the airline company's PPS which would be recording this transaction. Buying groceries from a supermarket where the transaction is recorded by the cashier using a barcode reader. So do you think the cashiers of supermarkets, they do manual entry of stock in and stock out? No, it is done by the barcode scanner. Once the product is scanned, it gets recorded as a stock out or movement of stock out, right? So this is transaction processing system. Then withdrawing cash from a bank ATM. So it gets recorded in the TPS of the bank. Receiving inventory in a warehouse. Can you give me an example what technology can be used to automatically record incoming inventory? We discussed it yesterday. Let's see how many of you are able to recall. Absolutely right. Rehan has got it. RFID. Correct, Ishika and Shivnath. It would be the RFID which can be used to record the inventory incoming in the transaction processing system. Remember, we saw the video where it said that your data gets recorded automatically. You don't need any manual input now. So TPS processes data using one of the two approaches. Okay. There are two approaches which are used for TPS. One is batch processing and another one is real-time systems processing. So let's discuss it very simple. So what is batch processing? As the name suggests, the TPS would be recording the data in a batch. That, let's say, the batches are run every hour. So that would be batch processing. And real-time system processing is that once you enter the transaction, give me one example out of these only where real-time system is getting updated. Cash withdrawal from ATM. Absolutely right. Once you debit your bank, once you withdraw cash in an ATM, it automatically, real time, you get a message that your account has been debited. Is it getting processed in batch? Okay, that you have debited now, and after 1 hour, the bank will debit your account. Does it work like that? In the 1 hour, you will overdraw your account if your account doesn't get updated in real time basis, right? So different information require different type of processing. So I give you one example where real time processing is absolutely mandatory, and that is your cash withdrawal from a bank. Whereas this purchasing airline tickets. Now, this could be posted hourly by the airline company that these all transactions happened in the past 1 hour. We can post it in 1 hour because there the customer would not want that data on a real time basis. So it's all as per the needs. I'm talking about the internal entry, which would be passed in the books of accounts of the airline company. I'm not talking about the details which are available on the app. I'm talking about the entry, the accounting entry getting passed because we are referring to transaction process system. Okay. So just giving you a few examples. Let's read about it from here. So batch processing, individual transactions of the same type are collected into batches and stored for later periodic input to the computer. Processing occurs in discrete runs. Payroll transactions are often processed this way. So salary is recorded this way. Then information about new employees, leavers, hours worked is collected over a period, and then the entry is passed over the month. Then payroll calculations are made at the end of the period. So batch processing is easier to control since data can be checked and validated before processing. So your salary information over the month we collected how many people took how many leaves, and all of those calculations can be done. Now, real-time system processing, we covered the example of ATM withdrawals. So transactions are processed immediately as they occur, keeping system always up to date. The advantage is the immediacy of data updates, but it can be challenging to control and has a higher risk of errors. A TPS includes controls to ensure the validity of the information entered and the accuracy of the processes. This is crucial for the reliability of the system generated information. So there would be controls to ensure that there is no such error, right? Banking systems are very robust. Very rarely you will hear news like, the customer's account got wrongly debited by this amount and all. It comes. I'm not saying it is zero, but very negligible. 1 in a million sort of a thing, right? So let's see an example. The TPS in a supermarket may include an electronic POS system, right? Point of sale system, where the goods are scanned by the cashier using a barcode reader when the customer is checking out. It may also use electronic data interchange system that enables the supermarket system to communicate with the supplier's system. The following action cycle occurs. Let me show it to you. The customer proceeds to check out and the cashier scans the products to calculate the amount payable. Inventory database is updated to reflect the sale of goods. Automatically, the barcode scanner helps to record the transaction. Customer presents credit or debit card. This is scanned. The cashier takes your card, he scans it in the machine, and the payment is transferred from the customer account to the supermarket. Reorder level is reached for an item of inventory. Okay. So the reorder level will be seen because the stock out has been recorded, and every time the stock is moving out, the level of inventory will come down, and then it will reach the reorder level. Okay. So every time this transaction is happening, so reorder level will be reached. EDI, electronic data interchange. So it may also use an EDI system that enables the supermarket system to communicate, right? So what will happen? EDI is used to automatically place an order with the suppliers. So once the reorder level is reached, the EDI of the company, okay, the EDI system of the company of the supermarket will be used to automatically place orders with the suppliers. Because the supplier would be selected, which supplier they take the products from, which product has to be ordered, that is also there. So EDI is used to automatically place an order with the suppliers. When an order is ready, the supplier informs the retailer that the goods have been sent, also through EDI. Then barcodes on goods can be used to track them during delivery. When received, see, barcodes are read and the retailer systems are updated that we have got the inventory in. Suppliers may also be informed that the goods have been received. Then supplier sends purchase invoice to the retailer through EDI. Then this interchange is happening between the supplier and the supermarket. The supplier will do what? They will send the invoice to the retailer. Invoice details will be checked by the retailer system and agreed to information already on the database. Then payment will be authorized and then made by EDI authorizing the retailer's bank to allow a transfer of funds to the supplier's bank. And then retailer's database updated to record payment and settlement of the liability. So I hope you understood from this example. This is a typical TPS example in a supermarket. Please go through it. Let me know if you are able to understand very step by step. You're able to visualize at what step what happens. So it starts with the customer scanning the product. A customer purchasing something and the cashier scanning the product. And then it ends with the payment for those goods to the suppliers. Please go through it. Let me know if you're fine. Any doubt, anyone, let me know. You want me to scroll down? Let me know. Through it, let me know. It's scrolling down. Electronic data interchange. Let me capture its definition in the notes also. So it is a way to communicate. It is a way for businesses to communicate with each other without using paper or email. Understood? All right. So in a standard format, the order will be placed. In a standard format, an acknowledgement of the receipt of goods would be done. So this, this is what EDI means. Okay. All right, coming back. So we have completed what? Transaction processing system we have done. Next is MIS, Management Information System. Management Information System converts data from internal and external sources into information used for management at all levels. See, MIS is a term which is used for information that is conveyed at all levels and across all functions to make timely and effective decisions. Okay. And MIS involves, what does it involve? Preparing an what did it say? Converting data from internal and external sources into information. Basically, data which is unstructured, which is an unstructured form, it gets converted into information, which is a structured form and can be used by different levels of management to take informed decisions. So an MIS involves obtaining data, processing data to produce useful information, and then distributing information to relevant managers or staff members. Information from an MIS serves three main purposes: planning, controlling, and decision making. So planning is deciding what the organization will do. Controlling is ensuring the organization stays on course. That is, it is on track to achieve its goals. Decision making, choosing between different courses of action, such as whether to develop a new product. So MIS can vary greatly. Every company will have its own MIS because it's internal to the company. They all have their own formats. Okay. So it is used for choosing between different courses of action. So it is used for decision making, right? MIS can vary greatly depending on the organization size and complexity. Small owner managed organizations, the MIS is very informal, with the owner obtaining information through discussions with staff and personal observation. Whereas larger organizations, if you are working in corporates, you would know this better. In larger organizations, they require specially designed information systems. The growth of IT has led to a more formal approach in developing these systems. So the reports are standardized. Whereas in small owner-based organizations, the report will be open ended. It may be just completely informal on the basis of the conversations with the team. In large organizations, careful planning is crucial to avoid problems such as poor communication of information to appropriate personnel, inaccurate data leading to bad decisions, and information being provided too late. So let's take a look at the question activity for you. Suggest examples of information that would be required from an information system for each of the following: a market trader working in a fruit market and materials purchasing department in a factory. Okay, giving you about 5 minutes. I want answers to both this part A and part B. Give it a try. All of you should try. You have to give examples of information that would be required from an information system for each of the following. Please try and let me know whenever you're done. Message your answers in the chat box. Hi, Sneha. Yes, you'll be able to understand. We're discussing pretty simple topics now. So stay in the call and have a look at this question. From your general understanding also, please try this. Everyone, let me know whenever you're done. And Sneha, you'll be able to understand. Just hold on. Time is up. I've got two answers. Let me see. Rehan and then Shiknath. Others, are you trying? See, if you are there in the in the live class now, please make the best use of it. I would suggest try the answers, see, and get it reviewed. So, because learning is one thing, of course, you're learning new topics, but when you're in a live class, you can submit your answers, I can review it, and I'll share feedback only for your development. So don't worry about whether my answer will be right or wrong. Just try it out because I gave substantial time for you all to solve and share it with me. So going forward, also please everyone participate. Any questions which I'm giving in the class, it's for your own development. Because if I discuss everything, then you will not learn. It's for now your activity questions are there for you to apply your skills. Okay, now let's have a look at the model answer and then I'll review the answers given by Shivnath and Rehan. So first one was what you have to give. See, what was the requirement? Requirement was to give examples of information that could be required from information system of by a market trader working in a fruit market. So the market trader will need to have some forecast of demand for each type of fruit on a particular day. This will see in this type of market, fruits, vegetables, it is very important to forecast demand. So for example, you would know, like, or in flowers also. These are very demand-based businesses because let's say it was Ganesh Chaturthi yesterday. So I'm sure it is fair to assume that the demand for flowers, fruits, it will go up on such days. So the market trader will need to have some forecast of demand for each type of fruit on a particular day. This will probably be based on experience and gut feeling rather than on any formal information. Okay. The trader will also need to know what prices customers are willing to pay and what prices competitors are charging. Then how much cash has been taken each day. This will be ascertained by counting cash. The information used by market traders are informal, based on observation only. Okay. I hope it is clear, everyone. Any doubt? That is about the market trader. So you'll be looking at the prices, the prices the competitors are charging, what is the demand gonna be like. So all of these things will be checked by the fruit trader. Next, moving on. Yeah. So material purchase department. The material purchasing department will need to know the following information. What existing quantities of all materials in the warehouse. Okay. That what is it there in the warehouse. Expected use during the forthcoming period. What the demand for the product is going to be. So they will want to know what the usage is going to be in the forthcoming period. This will be based on production schedules and bills of materials for each product that is made. Then information about economic order quantities to ensure that purchasing decisions minimize the cost of holding and ordering inventory. Okay, so this information would be used by purchasing department. Now let's have a look at the answers that I've got. Rehan said prices of fruit for market trader, correct. Fruits in trend, which are in high demand by the customers. Information regarding imported fruits. This is also absolutely valid. Then purchasing department will want to know price comparison of material from different suppliers. Correct. Alternatives available to existing materials. Correct. Then forecasted prices of materials to stock materials with higher price in future. Okay, so basically whichever materials are going to increase, prices are going to increase, you're going to stock it. That's also a valid point. Now, Shivnath says for fruit traders, purchase of fruits, procedures relating to info. No. So, Shivnath, you have mentioned procedures relating to importing of fruits. What the question is asking you, please take a look. Examples of information that would be required from an information system. What is an information system? It is internal to the company that is capturing the data. See, we just learned about information system. It converts it is capturing the information and then it is converting it into meaningful information. So procedures is not something which will be converted by an MIS. So that point is not valid. Price of fruits is valid point. Then material purchasing department, existing materials in the warehouse, correct. New raw material purchase, correct. Forecasting cost of raw material. These all are correct. Just one error in your first part. Then Nishwa says, for a fruit trader, information is required in which area fruit is selling more, correct, and which type of fruit. And for material purchasing department, compare the price of products with competitors and its future demand and price. Absolutely right. Now the next type which we have here is decision support system. So decision support system are computer-based information system. So what did we learn first? Transaction processing system. Second one is, let me highlight and show you. So we learned about this one first, transaction processing system. Second, we learned about management information system. Third one is decision support system. And this is executive information system. So decision support system are computer-based information system that assists managers in decision-making processes, often incorporating analytical modeling techniques. For instance, a basic decision support system could be a financial model in Excel that calculates the NPV of an investment. Basically, if you input the variables in this type of a decision support system, it will calculate the NPV on its own. So that type of modeling has been done. So users can modify variables within the model to conduct what-if analysis, assisting in investment decision making. So you'll be able to decide whether you should invest in a particular project or not. Decision support systems can vary in complexity, and they don't always have to be highly intricate. For instance, a forecasting model created in a spreadsheet where users can adjust variables. So they will adjust a few factors like, let's say, inflation, the growth in the economy, or the growth in the company. All of these variables, if they are input, the system, the Excel, will calculate the values for you. In fact, if you're working, you would know that there are some standard templates which are in use in a company. And if you update that data over there, it gives out the necessary output. Okay, so that is what a decision support system. It doesn't have to be a complicated, intricate system. It could be as simple as an Excel. So example on decision support system, Larger is an original equipment manufacturer that employs many employees across multiple shifts. These employees have contracts varying from full-time to part-time that have committed to being available at specific hours on certain days of the week. Larger uses a DSS to create its weekly duty roster. What is roster? Schedule for employees who will come when. So Larger, because it is having so many employees across multiple shifts, okay, so it needs to use a roster. The DSS extracts the necessary information it needs from the HR system, such as available employees and their hours, employee leave, and specific functions of the employees. Like employees specialized in a specific area of manufacturing, and solves for a duty roster that ensures optimum staffing for each production line throughout the week. So there are actually softwares in which you input the variables, the software will pop out the results. That, okay, you ask Mr. X to come on this time, Mr. Y to come on this time, it will give you all those details. So you do not have to take a decision. The system will take automated decisions on the basis of some set parameters. Suppose the DSS is unable to suggest staffing for any specific section of production line. In that case, it flags the shortage as an error so that production and human resource managers have time to arrange alternate staffing arrangements or adjust production line loading. Okay. I hope DSS is clear. Anyone having any doubt? Please confirm if it is fine. Let me know. Perfect. So next type which we have here is executive information system. Now tell me who will be using it? EIS will be used by whom? Expect these type of questions in exam. Correct. High level, or you can say strategic management. The top tier management. In whatever we have learned so far, we are calling them strategic management. So EIS is a system designed to assist the decision making of senior management by providing summarized information from internal and external sources relevant to an organization's strategic goals. It is a specific type of decision support system. Basically, if you understand what they are doing, say MIS, if you just go back, you will understand that each one of them is deriving information from the earlier one only. So TPS is the starting point. It is recording the transaction level details, like we saw the example of supermarket. Then this transaction level data from internal or external sources, it is converted into information. Okay, so MIS summarizes a bit of TPS. Then further, this type of information, if it is input in the DSS, then it gives decisions. Okay. And then finally, EIS. So EIS is like a dashboard for the senior management. That these all are the metrics of performance of the company. So EIS is a system designed to assist the decision making of senior management. It is a type of decision support system. So important decisions out of the DSS will be flown into the EIS. And EIS typically provides senior management with high-level information about the company's performance. This information may be extracted from a central database using reporting tools. The systems may also be linked to external data sources, like financial information from internet sites. So for example, if let's talk about Nivea, okay? Now, or any FMCG company, like HUL, ITC, these are all competitors, right? Now, they can access the publicly available information. Both of these are listed companies, right? So their information would be available in the public domain. So, the EIS can be so advanced that it picks up the necessary information, or if it is, fed into the system, it will pick up the necessary information from those documents and create important dashboards out of it. So charts, tables, and other graphical tools often accompany numerical data in a dashboard, okay, that helps managers visualize performance with drill down facility. That means if they double click on something, if they want to know about something in detail, and if they want to drill down on a particular information, that facility is available on this dashboard. And EIS often allows users to customize their view to focus on information most relevant to them. This overcomes the problem experienced in many information systems, whereby senior managers receive standard monthly reports irrelevant to their concerns. Okay. So, the senior management will receive only that information which is relevant for them. Okay, so this is what we saw in this diagram. These were the 4 types, right? TPS, MIS, DSS, and EIS. Now, over and above these 4 systems, a very critical system which is in use in any company, and I have been using this term ERP system. SAP is what? Oracle is what? These are all ERP systems. Okay. So ERP system is a software system that facilitates a seamless flow of information across an organization by utilizing a shared database. So now this ERP system is not specific to any one level of management. It flows through the entire organization. So before ERP systems, organizations operated with separate systems for different departments like warehouse, and finance. So every department would have its own database. Okay, I'll use this, you use that, and there would be a lot of confusion because there is no synchronization of data, no uniformity in data. Inventory, and I have practically faced this challenge in one of the assignments during my articleship time when I was doing articleship for CA. One company, they would not have a centralized ERP. I mean, ERP was there, but it was not integrated across all the modules. So for all modules except for stores department, that is the warehouse department, it was under ERP. So what used to happen, and it was like every day this confusion would be there in their in their organization. What? So the stores department, they were maintaining, or the warehouse manager was maintaining his own Excel of materials. Okay, that this is incoming in my warehouse, this is outgoing, this is the balance of materials in my warehouse. And a big company I'm talking about. And on the other hand, the system would say something else. Okay. Now the purchase manager, we just saw an example of purchase manager. He has to see what stock is already there in the warehouse. What would happen is that this purchase manager will always be in a confusion. Which stock is correct? Because system says that this has come in, this material has come in, whereas the the stockkeeper, the warehouse keeper is saying that no, it has not come in. So there was no flow of data or uniformity of data, and it used to cause so many stock out position. Sometimes the production will stop in between. So that is the importance of an integrated ERP system. Okay. So if you have before ERP system, organizations operated with separate system for different departments like warehouse and finance. These systems were not interconnected, leading to manual communication methods for sharing information between departments. This often resulted in duplicate data entry and time-consuming reconciliation. And I'm telling you, this organization which I'm talking about, so much time would get consumed in just reconciling. Okay, this stock would have come, not come. And since it was an organization of a big scale, so you can understand that used to be a lot of stock movements also. So that reconciliation itself was a challenge. So an ERP system aims to integrate various functional areas of business processes into a unified approach across the entire organization. Now, typical modules found in an ERP system include accounting and financial, inventory control, supply chain management, material requirement planning, customer relationship management, all of these modules. This list is not exhaustive. There could be different modules in different ERP systems. For management accountants, the introduction of an ERP system brings several implications. A reduction in gathering and processing routine information due to automated data capture processes, because the data is getting captured automatically, and shift in the role of management accountants to more strategic decision making activities rather than being involved in all of these unnecessary confusions. So the role of a management accountant, which you would become going forward, right, when you qualify the exam, management accountant, financial accountant. So when you are working in such type of a company, your core areas would be to work on strategic decision making rather than working on these types of nitty-gritties, right? Because ERP systems, if they're implemented properly, it gives a lot of smooth flow of information and correct information in the company. Please tell me if it is clear concept of ERP. Anyone having any doubt? Go through it, let me know. Understood? All right. Now, one more type of system which you should know is customer relationship management. I think I have a video on this. Let me search. Actually, two videos. I've got two really good videos.
What is CRM? Good question. CRM stands for Customer Relationship Management. It's technology that helps you keep track of everything about your customers and your potential customers so you can build great relationships with them. CRM used to be all about sales, but not anymore. CRM is for every department, sales, but also marketing, service, commerce, and IT too. A great CRM helps you do amazing things. It centralizes all your important customer information and company data in one place. So your teams have the right information to deliver the easy, connected experiences customers expect. Take Carol here. Carol owns a network of scooter dealerships. She has a lot of customers. We just met one, Celeste. Yesterday, Celeste configured the scooter of her dreams 43 times. And because Carol has CRM, her marketing team knew it, which is why Celeste just received an automated email that got her off her couch and into a dealership to take a test drive. When Celeste arrives, the scooter's already waiting for her, along with some accessories the sales team knows Celeste is gonna love. Next thing you know, Celeste is buying herself a scooter, a snazzy helmet, and some really nice accessories. But it's not just sales and marketing who know Celeste. Thanks to Carol's CRM, every department knows her because every team has one shared view of Celeste and all her information. Before she's even made it back to her couch, service has already sent her tips to help her care for her scooter. Marketing uses built-in AI to predict what Celeste likes and suggest more great additions. Commerce uses the same insights to create an entire storefront customized just for her. And IT builds apps that connect her to an entire community of fellow scooter lovers. Friendship and love follow. Brand love, that is. Along the way, Carol's CRM just keeps getting smarter and more helpful, serving up actionable analytics for everyone at Carol's dealership, which makes Carol's employees happier and helps them surprise and delight Celeste again and again. The right CRM helps businesses focus on customers and unites everyone with one shared goal. Make Celeste, or whoever your customer is, happy.
Dealing with hordes of customer data is part and parcel of business management. Meet Joe, who runs a consultancy firm. From the leads generated by the marketing team to the personal information handled by the sales team, juggling so much data needs an efficient system. Joe was in a similar predicament. The rapid influx of leads, proper delegation of client duties to his team, and customer retention post-service. All of these duties were making Joe lose sleep due to overworking. Have you ever wondered how companies like Amazon and Google can maneuver such complications with ease? Kevin, Joe's friend, introduced the concept of CRM systems to Joe in order to help him manage the company's day-to-day activities. CRM platforms help in streamlining this process, which ultimately leads to better management of company resources, increased revenue, and higher customer satisfaction. But Joe wanted to understand first, what is CRM? CRM, which stands for Customer Relationship Management, refers to any business development, customer retention, and customer acquisition strategies, techniques, systems, and technologies. The objective is to strengthen interactions with customers in order to promote client retention and increase sales. CRM systems gather information on customers from various points of contact between them and the business, such as the company's website, the company phone line, web chat, email, marketing content, and social media. CRM systems may also provide staff workers who deal with consumers with in-depth knowledge of their personal data, purchasing history, shopping preferences, and challenges. The best thing about a CRM system is that it can be used by virtually every organizational unit, from sales and customer service to hiring, marketing, and corporate development. A better approach to handling external interactions is the crux of CRM platforms. Joe, like Kevin, can use the CRM platform to centralize all customer data, track service issues, locate potential clients, and manage marketing campaigns. It will help Joe's team access data much faster, and collaboration will become very smooth, leading to increased productivity. CRM platforms can serve companies of all sizes, from small startups to multinational corporations. Kevin's own startup uses a CRM platform that utilizes cloud computing, also referred to as SaaS, software as a service, or on-demand CRM, and stores data on an external, remote network that employees can access whenever they need to. Businesses with little technological know-how or resources are drawn to the cloud's speedy, comparatively simple deployment possibilities. Joe wanted to know how CRM platforms streamline back-end operations, which Kevin clarified gladly. Back-end processes like manufacturing, warehousing, shipping, engineering, or finance are not intended to be assisted by CRMs. Naturally, CRM technologies cannot control what they are unable to observe. Therefore, it reduces the efficacy of the system for the entire team if employees work leads or transactions outside of it. Some CRM applications are simply used for data management to help entrepreneurs like Joe and Kevin run their complete business more successfully. An all-in-one CRM system also provides crucial functions like landing pages, quotations, and invoicing. Joe was still not convinced, which led Kevin to explain how his startup benefits from their CRM platform. 1. All of Kevin's contacts are managed by a CRM, which also collects crucial customer data like demographics, purchase histories, and prior communications across all channels, and makes it readily available to anybody in his organization who needs it. This guarantees that Kevin's staff has all the information they want about the client at their fingertips and can offer a better customer experience, which usually increases client satisfaction. 2. By streamlining Kevin's sales process, creating a sales funnel, automating crucial processes, and gathering all of your data in one location, a CRM platform may help him boost productivity and sales performance. 3. CRM software often includes analytical features that contextualize data, dividing it into useful metrics and actionable things. Kevin may assess the performance of a marketing strategy and adjust his optimization strategies using metrics like click-through rates, churn rate, and demographic data. 4. One more thing that CRM software excels at is creating a single database that houses all of Kevin's company's client information and makes it readily available to anyone who needs it. This improves and increases the client experience, while saving his staff time from having to go through outdated files and information. 5. Kevin may see important trends and gain a sense of what to anticipate from his future sales cycle performance with the automated sales reports and CRM software. He can then modify his goals and targets to fit these estimates. CRMs automate operations like contact communication and collaboration, so Joe's team's daily tasks and procedures will move much more quickly thanks to the software. The CRM can also minimize mistakes and guarantee that all communications are sent to the appropriate recipients at the appropriate times. Thanks to Kevin's guidance, Joe can now focus on the important aspects of running a business, rather than manage the nitty-gritty details on a logistical level. So, here's a question for you. What is the primary purpose of a CRM platform? 1. Finding leads for business acquisition.
So I hope you got an idea about the CRM system. That first video which I showed was so interactive, right? So it's like if the CRM system of a company is robust now, then it can use it for so many purposes, like targeted, additional products that were being shown to that customer. Then, providing the best customer experience. So if you talk about all of the companies, customer experience team, CX team. They're all using CRM. So if you have made a complaint, for example, you received a faulty product on any of the websites, let's say we're talking about Flipkart for the time being. So you received a faulty product from Flipkart and you lodge a complaint. Okay. You would know that next time when you call them up, it's not like you will have to explain the entire issue again. That issue will already be lodged into their system. So they will know that this particular issue is open, and then whichever executive is available, they will try to provide whatever resolution is available with them. So what does it show? That at that level, okay, for each customer, the data is maintained by the companies. That is all possible through customer relationship management. Okay, the CRM software. So I've saved the link of the video in the notes also. Coming back. So this is now pretty clear to us. We'll go through it. A CRM system manages customer interactions and data, enhancing customer service, retention, and sales growth. Your customer will get glued to you if you give them good service. They get glued to you. They know that okay, we are dealing with a safe company. If we face any issue, we will get necessary resolution to it. It consolidates customer information, including purchasing history and demographics. Demographic means from where you are, what is your gender, what is your age group. So they will maintain all of these demographics for easy access. Key features of a robust CRM system are as follows. Data import. Easily import data from existing databases. User-friendly. Intuitive interface and strong user support. Adaptability. Scales with business growth. Customer satisfaction. It improves overall satisfaction of the customer. Yeah, sorry. So, customer satisfaction, it improves the overall customer satisfaction. Reporting and tracking, it provides easy reporting and tracking features. So you can track the status of your complaint. So if you have made any complaint, you can track it online, right? So that is the features or the key outputs of the CRM. Is it clear, everyone? Did you understand? Anyone having any doubt? Please confirm. Clear? All right, okay. So let's move ahead. So there are different types of information systems topic is now over. So we'll move to the next topic. Again, a very, very important topic from exam point of view, and that is big data. Okay. Anyone heard about the term big data before? Heard about it before? You might have. Yeah. Good. So now let's see what is written here, and then I'll show you a video also on it. I've got a good video on this one as well. So big data refers to extensive data sets that can be analyzed to uncover patterns, trends, and correlations, particularly concerning human behavior and interactions. So what is it? Extensive data. Mark this as an important topic, something which keeps regularly tested in exam. So big data refers to extensive data sets that can be analyzed to uncover patterns. So I've written an example over here. Flipkart, India's leading e-commerce platform, uses big data to enhance customer experiences. By analyzing massive data sets, Flipkart personalizes product recommendation See, when you shop for, let us say if you're shopping for a badminton racket, they will suggest you the necessary gears along with which will go along with that rackets, right? Then optimizes pricing strategies. So they will take a look at how the customers are reacting to the prices which are available on the platform. So they optimize the pricing strategy and improve delivery logistics. The company also leverages big data for demand forecasting and inventory management. Okay, now please understand. So we were discussing about the Big Billion Day sales yesterday. To host an event of that scale, they have to prepare everything, right? The supply chain, the inventories, all of it has to be available so that the customers get the products on time. So very robust inventory management is there, and all of that is powered by big data. That is, which warehouse? So please, I'll give an example. So India is a big country, right? And Flipkart is delivering in a lot of pin codes. Now, it's not just one warehouse with services to all. Different warehouses are based in different locations. So how is big data relevant in inventory management? Let me tell you how. So on the basis of past trends of orders over the years, it would be known that, this many quantity of iPhone gets sold in this pin code. So the nearest available warehouse or hub should have these many iPhones for delivery, for same day delivery. Or, you might have seen that we'll deliver your products in a few hours also in metro cities, right? So that type of configurations are done, where should be, what should be where. That is all possible through big data. The company also leverages big data for demand forecasting and inventory management, ensuring efficient operations and a better shopping experience for its users. So this is something, having seen also, this is there. Companies use this type of huge databases to take decisions, important decisions. Let me show you a good video on this. Let me see if I have one. The TED Ed video. It's good actually. So I was underwater.
Big data is an elusive concept. It represents an amount of digital information which is uncomfortable to store, transport, or analyze. Big data is so voluminous that it overwhelms the technologies of the day and challenges us to create the next generation of data storage tools and techniques. So big data isn't new. In fact, physicists at CERN have been wrangling with the challenge of their ever-expanding big data for decades. 50 years ago, CERN's data could be stored in a single computer. Okay, so it wasn't your usual computer, this was a mainframe computer that filled an entire building. To analyze the data, physicists from around the world travelled to CERN to connect to the enormous machine. In the 1970s, our ever-growing big data was distributed across different sets of computers which mushroomed at CERN. Each set was joined together in dedicated home-grid networks. But physicists collaborated without regard for the boundaries between sets, hence needed to access data on all of these. So we bridged the independent networks together in our own CERNnet. In the 1980s, islands of similar networks speaking different dialects sprung up all over Europe and the States, making remote access possible but tortuous. To make it easy for our physicists across the world to access the ever-expanding big data stored at CERN without travelling, the networks needed to be talking with the same language. We adopted the fledgling internetworking standard from the States, followed by the rest of Europe, and we established the principal link at CERN between Europe and the States in 1989, and the truly global internet took off. Physicists could easily then access the terabytes of big data remotely from around the world, generate results, and write papers in their home institutes. Then they wanted to share the findings with all their colleagues. To make this information sharing easy, we created the web in the early 1990s. Physicists no longer needed to know where the information was stored in order to find it and access it on the web, an idea which caught on across the world and has transformed the way we communicate in our daily lives. During the early 2000s, the continued growth of our big data outstripped our capability to analyse it at CERN, despite having buildings full of computers. We had to start distributing the petabytes of data to our collaborating partners in order to employ local computing and storage at hundreds of different institutes. In order to orchestrate these interconnected resources with their diverse technologies, we developed a computing grid, enabling the seamless sharing of computing resources around the globe. This relies on trust relationships and mutual exchange. But this grid model could not be transferred out of our communities so easily, where not everyone has resources to share, nor could companies be expected to have the same level of trust. Instead, an alternative, more business-like approach for accessing on-demand resources has been flourishing recently, called cloud computing, which other communities are now exploiting to analyse their big data. It might seem paradoxical for a place like CERN, a lab focused on the study of the unimaginably small building blocks of matter, to be the source of something as big data. But the way we study the fundamental particles, as well as the forces by which they interact, involves creating them fleetingly colliding protons in our accelerators and capturing a trace of them as they zoom off near light speed. To see those traces, our detector, with 150 million sensors, acts like a really massive 3D camera, taking a picture of each collision event at up to 40 million times per second. That makes a lot of data. But if big data has been around for so long, why do we suddenly keep hearing about it now? Well, as the old metaphor explains, the whole is greater than the sum of its parts, and it is no longer just science that is exploiting this. The fact that we can derive more knowledge by joining related information together and spotting correlations can inform and enrich numerous aspects of everyday life, either in real time, such as traffic or financial conditions, in short-term evolutions, such as medical or meteorological, or in predictive situations, such as business, crime, or disease trends. Virtually every field is turning to gathering big data, with mobile sensor networks spanning the globe, cameras on the ground and in the air, archives storing information published on the web, and loggers capturing the activities of internet citizens the world over. The challenge is on to invent new tools and techniques to mine these vast stores, to inform decision-making, to improve medical diagnosis, and otherwise to answer needs and desires of tomorrow's society in ways that are unimagined today.
Did you understand the evolution of big data? It has been around for long, but it has certainly become so important, as the video answered, that now there is greater level of correlation which is possible because of a distributed database, right? So now we know that all of the companies, as the video also mentioned, that all of the companies are maintaining their own sets of big data. So I was giving you the example of Flipkart. So to understand what type of database of customers we have, we'll do the analytics. Okay, that a person of this age group is ordering this much, and so on and so forth. That this is from a tier 1 city, tier 2 city, tier 3. Then these all things helped us to develop better recommendations for the customer. right? Now, very important are the 5 characteristics of big data. You'll have to memorize it. Please remember what are the pretty simple explanation wise. It is pretty simple, but just remember it. Volume, variety, velocity, veracity, and value. Okay. So what are they? Volume. These are characteristics of big data. So of course, big data has got a large amount of data that exceed the capacity of a single computer, such as customer purchase details in retail. So volume is very high in big data. Next is variety. Diverse data from internal and external sources, including structured and unstructured data, like customer feedback, reviews, and social media posts. So it is actively tracked. Whatever is being posted, let's say if you're continuing the example of Flipkart only, whatever is posted about Flipkart on social media, even that is monitored by the big data of the company. Then velocity, rapid and continuous data generation requiring quick processing for actionable insights. Veracity, ensuring data accuracy and reliability, considering both the data's quality and its sources, which may vary in reliability. What is veracity? Veracity is basically reliability of the data. Velocity is what? The speed of generation of data. Don't get confused. Velocity is what? That data is getting generated very fast, rapid generation of data. Veracity is what? The reliability of data, that it is correct. And value is what? Assessing the potential value and benefits of analyzing big data, considering costs and resource investments. Okay. So these are the 5 characteristics. Pretty simple. What is it? Volume. Big data has a big volume. Variety. Big data will have a variety of data. Velocity is that big data will be generated in a very quick time. It is rapid. Then veracity is what? That the data is reliable. And value is what? That there should be some value attached to the collection of data. There's no point in collecting every information in the world. There has to be some value, and therefore only it should constitute big data. Not everything should be recorded. Like how many times I picked up my phone from the table. That is not something which any company would be concerned about. Right? So there has to be some value. But how many times I shopped something, that is something of value to a company. So that is what the attribute or characteristic of the value means. Please tell me, is the concept of big data absolutely clear? All the videos, the discussions which we have had, are you all able to relate to it? The 5 V's, it is commonly asked in exam. What are the 5 V's of big data? So you might have to select, the correct options. That is there. So if you saw the video mentioned a very important term in it, data mining. So it is a part of data analytics, which we are going to study now. So data analytics, which processes big data, encompasses various techniques. Data testing, evaluating models or hypotheses using existing data. So you're testing. So there is some existing data, and then you will see whether the data is correct or not. So you have some hypothesis. You know that this is true. So for example, you know that tier 1 shoppers, they spend more. Okay, so let us say their average order value is around 5,000 rupees. Whereas tier 3 shoppers, they have an average value of, let us say, 900 rupees. I'm taking random numbers. So this is a hypothesis you already know. Now, if you have to test whether the data is correct or not, you will evaluate these hypotheses using this data. Whether the new set of data is also giving the same or similar, may not be exactly same 5,900, but yes, it should be on the similar pattern. So that is data testing. You're testing the data. Next is data mining. Analyzing data to uncover patterns, relationships, and correlations. This includes identifying relationships between the variables. That means if a person is of this age, he will shop this much. So you're identifying the relationship. You're creating a relationship between the variables. Applying known structures to new data. That means you're seeing whether, like I was telling you about data testing. So whether the new data corresponds with the existing known structures. Discovering groups and similarities within data. So you know that this is, these all data points can be clustered together. So discovering groups and similarities within data. Then detecting outliers, that this doesn't seem to be correct, or it might be a one-time aberration. So it needs to be removed from the data set for having a good value giving decisions from it. Establishing functions that express data relationships accurately. So once you analyze the data, when you mine the data, you understand that, okay, these are the functions which express the data relationships correctly or accurately. So that is what data mining is. What is it? Analyzing the data to uncover patterns, relationships, and correlations. Okay. Next is predictive analytics. Using data mining to predict. Okay, so now when you have analyzed the data, when you have mined the data, now on the basis of that, you can predict. For example, your weather, weather in your city. So basically, you know that September is hot in all of these cities. So this would be the predicted temperature. See, on Google Weather, you are able to see that this is going to be the temperature over the next 10 days, 15 days. How are they getting it? That's predictive analytics. They have the data of weather for so many past years, and now they are using that to predict what the weather is going to be in the next 10 days, 15 days, 1 month. So that is using data mining. So you have analyzed the patterns. Now using that data mining to predict future events, often employing statistical or machine learning methods. Next, we have text analytics. Extracting insights from text data, such as emails or documents, identifying keywords or interests. I'll give you one example over here. You might have seen it. Anyone who has shopped on Amazon, or you might just see it right now also while you're in the class, you go and open any product, okay? Any popular product you open, and then you go to the reviews. You will see what Amazon has started doing now. They will give you a summary of the reviews. Anyone seen that? I see it right now only. Just go to Amazon and go to the product reviews of any one popular product, which will have some number of reviews. Okay. So let's say you open up any mobile phone. I'm randomly opening any one mobile phone. And if you just scroll down, towards the end where the reviews are given. See, I just opened up OnePlus phone, okay? What they did is, customers like the camera quality, battery life, and charging speed of the cell phone. Okay, they mention, I'm just reading out from the phone. They mention it has a good rear camera, long-lasting charging, and impressive fast charging. Some say it's worth buying and a great deal. Customers also mention it runs smoothly and is ideal for gaming. And below you will see a line mentioned that AI generated from the text of customer reviews. This is a typical example of text analytics. Are you able to understand? So it has analyzed all the text reviews which were given on any phone. You can open and see on any product, you will see that. It's a new feature which I recently, saw. Did you all check it right now? Yeah. Any product you take up. So what are they doing? They're analyzing the text. So much text, because as customers earlier, what did we have to do? We have to read every comment, every review which has been given by multiple customers. Now what Amazon is doing is that it is giving you a summarized review of all the customers together, that, it is good for fast charging, it has got a good camera quality. So it's a text analytics. One example of text analytics, which you can visually see on your phone also. Okay. Then similarly, we have voice analytics also. So similar to text analytics, but applied to audio data. I'll give you one example here. You might not visually see it, but whenever you make a call to the customer care of any company, they say now that this call may be recorded for quality and training purposes, right? They mention this and then they record your call. Now, do you think someone is so free in this world that they will sit down and just start hearing to every conversation? It doesn't work like that. What they do is they use voice analytics. They will run softwares on these recorded calls and try to find out the gist of the complaints. That, okay, the customer is complaining about this. Maybe the refund was not processed, or refund was not processed on time. The wrong product was delivered. Different types of issues will be analyzed, and on the basis of voice analytics. No one is going to sit down and listen to the whole calls throughout the day. It is going to be softwares which will be run on these audio clips. Are you able to understand? So that is voice analytics. Then we have statistical analytics. So identifying similar trends, correlations, and behavior changes using statistical methods. Okay. So different statistical techniques could be used, which will help you. So we are going to learn about it. Correlation, for example, we are going to learn correlation. It is a statistical technique. So it can be used to identify what is going to be the trend in the data. Please tell me, did you understand all the examples which I gave you? Anything that you want me to explain more? If it is clear, then we'll move to the next part. Predictive analytics, I gave the example of Google Weather. Text analytics, I showed you Amazon. Similarly, the voice calls of customer care teams. Right, so all of these are data mining already discovered. With the example of Flipkart, that how can you understand the relationships between different variables, which tier people are ordering what, right? So that is data analytics. The next one here is the DIKW pyramid. The big data pyramid, conceptualized by Ackoff and expanded upon by Jennifer Rowley, illustrates, no need to remember the names, just for information it is given. So the big data pyramid illustrates the progressive transformation of raw, unstructured data into information, which gets converted into knowledge, which gets converted into wisdom for informed decision making and precise forecasting. So that is what the DIKW is about. The big data, it starts off as data. It's completely unstructured and very massive data. It has you need to use big tools to derive information out of it. Then information can be used to enhance knowledge, and then it enhances the wisdom. Okay, let's read about it in more detail over here. So data, facts and figures, whatever gets recorded on the face of it using big data. Data may be provided from a number of sources, but it is not helpful if there are no links between different items. It's just raw data, raw dump, no links. You have to use it in some way. You cannot use it in that exact same form. So for an airline undertaking overbooking, that means airlines sell more tickets than seats on the plane to ensure planes are used at maximum capacity. Now, for this, data might include ticket prices and purchase date relative to flight date. Then, if they want to do overbooking, so what airlines normally do, they sell more. 1 or 2 seats, they will sell more than the seats on the plane, because some flights, some people cancel on the last minute, some people do not come up. So these, all the low-cost airlines, they do this. So data might include what type of data will they use for carrying out this activity. Ticket prices and purchase date relative to flight date. Passenger check-in or no-show, and impact on plane capacity utilization. Season time of the year, because mostly if it is off-season time, people will not normally miss their flights. But during on season, let's say if it is Diwali, Holi, they will, be wanting to travel to, let's say if they're traveling back to their homes. So there will not be lower chances of a no-show, right? Season and or time of the year. Overbooking compensation offered. So for example, it turns out, okay, so the airline has done overbooking and somehow all the passengers showed up. So then they will give a compensation that, okay, sir, you please take the next flight. This is the compensation from us because we cannot accommodate you in this flight. Then passenger demographics, gender, city, and all of that. Compensation acceptance rates. Like, okay, I'm giving you the compensation. It is not now. Like, you will accept the compensation. You may say, no, I want to travel right now. I don't want to travel on the next flight. So, what is the rate of acceptance of compensation? And then forced overbooking removal rates. So then they will say that, okay, you'll have to offer higher compensation to some other person. If that person is not agreeing, then you'll have to give higher compensation. So it's all game of demand and supply, right? So this is all facts and figures. These all data can be captured. That what is the passenger demographics? What is the acceptance rate? It's all data. It's not something that you're using right now. Okay, so this is all data. Then we will see how it gets converted into information. So all of these things can get recorded. Okay, that what are the ticket price? What is the compensation that you're offering? And that is at the level of data right now. Information. Identifying data relationships. The initial analysis aims to find the meaning of the data and establish what links and relationships there are between the data. If these are established, the data becomes information. So the following relationships might exist. Passengers that purchase tickets earlier accept lower compensation because they have paid less. They've booked earlier, so they had booked many days back. So they have purchased tickets earlier, so they will be okay with lower compensation also because they paid less for the ticket. Passenger no-show rates are higher at certain times of the year. So all of this is information. You captured the information here that this is the no-show. But then you try to correlate it with the season. Then compensation acceptance rates and amounts correlated to the ticket price. So all of this correlation you're trying to find out between the different elements of data. Then knowledge. Understanding data relationships. So first, what did you do? Data is facts and figures. Data is facts and figures. Information is what? Identifying the relationships between the data. Then knowledge is what? Understanding the relationships. So first, you took facts and figures. Then you identified the relationships. Now you're understanding the relationships. So further analysis provides more detail about the context of how and why the links between the data might arise and what the specific connections and patterns are. Establishing these things means that the data which became information has now become knowledge. So the following understanding could be ascertained. 90% probability of accepting compensation is at 80% of the ticket price. So you found different relationships over here. Now you're making it knowledge. You're understanding the relationship. So the probability of accepting the compensation is 90%. Then the compensation is 80% of the ticket price. Then compensation rejection rates higher and no-show lower during major holiday seasons. Like I was telling you, people will not want to miss their flights home, or they may not want to delay the flights home. They want to go home. So the rejection rates will be higher and no-show rates will be lower. Like I was telling you, they will not want to miss the flights at any cost. Then persons traveling alone have higher compensation acceptance rates. Is that okay? I'm traveling alone, I'll wait for some time. But if you're traveling with family, if you're traveling with elderly people, you're traveling with kids, then you'll not want to accept the compensation, na? Because then you'll have to make the entire family wait. So these are all knowledge. These were the relationships that you made. Out of it, now you're understanding the data relationships. You're deep drilling into it. That is when it becomes knowledge. Okay. And then finally comes wisdom. This is about improved decision making from the understanding of the relation. So I hope you're understanding the flow, facts and figures, identifying the data relationships, then understanding the data relationships, and then improved decision making from the understanding of data relationships. So ensuring the knowledge can be used to make an informed decision and correct predictions means that it becomes wisdom. Now you are using your knowledge to predict something. That is wisdom. So design of ticketing and overbooking policy and processes with adjustments to compensation amount. So you're saying that, okay, we will adjust the compensation amount accordingly. Alternative flight dates and compensation offers made based on prevailing conditions at the time. Okay. So you are using the knowledge to predict something and, accordingly change your policy. That is done through wisdom. Please tell me if it is clear. All the elements we have discussed with some examples here. Let me know if it is fine. Go through it. Let me know if you want me to discuss any point again. Clear? All right. Perfect. Now let us understand the benefits of data analytics. So we have understood a lot of things already. We will know most of these points here. So analytical insights derived from data can significantly enhance decision making and performance management across various domains. Marketing. Understanding customer preferences by analyzing browsing histories. What are you searching for? This is what typical. You search for any product, all types of advertisements will now be focused on that category of product. So I was giving you some example of Encryption products. I've been with me sometime back. I searched it up. Then all types of related products. I'm not saying Caffeine's products, different brands. Okay, they are now starting to pop up on my feed. So all of this data is shared. Anything that whatever you're browsing, you'll just start seeing ads for that. In fact, the YouTube ads also. It somehow just tracks whatever you're doing on the online world. Okay. So understanding customer preferences by analyzing browsing histories and purchase patterns, leading to targeted promotions and product recommendations. Then customer service, gathering feedback from diverse sources. So I was telling that Flipkart tracks what is being talked about them on the social media. Let's say if you're posting a complaint on Twitter, I'll give you a perfect example of this. I have already done it. So it is of 2022. Okay, so I purchased a flagship phone of Samsung. Okay, it was 2022. So I purchased the phone, and then somehow the screen started not functioning properly. It was not functioning properly. I tried reaching out to the customer service. What they told me is that, ma'am, we will look into the issue. You bring your phone. You bring your phone to the customer care center at this location. So I was in Bangalore at that time. And somehow I was like, why should I take the hassle of going to the customer care center? I already purchased a good phone. Why should I even bother about these types of issue? The company should resolve it for me. And the words were, they will look into the issue. Who will pay the charges and all? That they did not clarify. What I did, and it was a phone that was launched in that year only. So what I did, I made a remark on Twitter. And I tagged all the handles of Samsung India and all. And then somehow I get a call from the customer care division of the company. They called me, ma'am, that are you facing this issue? And yeah, I said, yeah, I've been facing this issue. I highlighted it. Okay. But they said that you have to come to the customer care center. Why should I travel? I told them the same thing which I just told you sometime back. They said, okay, ma'am, we will come and pick up your phone. So our agent will come to pick up your phone. You don't have to travel anywhere. Okay. And then they took the phone. They did the replacement, whatever they wanted. They took my phone for just one day. And then they replaced the screen and they gave it back. They only came and gave it back to me the next day. And what I realized was that how prompt they become if you're highlighting the right point. See, if you highlight anything at all, so then they may not react. But if you're highlighting a genuine issue and you're doing it in the right way, you get that response, right? So this is the benefit which you as a customer also get. And why are you getting it? Because companies track their customer service feedback from diverse sources. So I hope you're able to relate to it. So gathering feedback from diverse sources, including social media, to improve service quality and address customer concerns effectively. Okay. So this is the benefit of data analytics. Then competitive advantage. Using data to detect and respond to shifts in customer preferences ahead of competitors, fostering a competitive edge. Okay. So they will use the data, to understand the shifts in customer preferences, right? Rinky messaged, when I was watching for ACCA course, then I started showing up everywhere on Instagram. Yes, everywhere now. Because once you've browsed, okay, so for example, you browse for ACCA, then all these institutes, different institutes, maybe, let's say we have VGLD, then, different, a lot name, but all of these institutions, they will start popping up on your feed. But take up ACCA from this institute. It's fair, that's how marketing works, online marketing. That the database gets shared. Whatever you're browsing, it gets shared with the respective people if they have paid for it to Google. Okay. So customer loyalty. Leveraging data from loyalty programs to create personalized offers and incentives, increasing customer satisfaction. So you can get better customer loyalty. So I'll give you one example. If you have shopped on Damilanu, okay, bags and all. So every time there is, and different companies do it, and not just Damilanu, a lot of companies do it. So if you have shopped and you would have entered your birthday details, your anniversary details, if you mention that, every in the month in which you have your birthday or your anniversary, you will get a message from them that, okay, if you shop during this month in any of our outlets, you will get a 25% discount. Okay. So what are they doing? They captured the data of the customer, and just imagine the number of customers these brands have. They captured this data and now they're enhancing customer loyalty out of it. They're doing targeted campaigns, personalized offers that it's just for you. That's your birthday this time, so we are giving you 25% discount on our products. So that is leveraging the data to create loyalty programs. Then operational efficiency. Enhanced sales forecasting improves inventory management, reduces waste, and optimizes resource utilization, especially for perishable goods. Perishable goods, now you have to plan your inventory very well. In fact, we'll be doing questions also that how many days of inventory should be ordered for. Let's say there's one question on bread. So the bread will otherwise become stale in 2-3 days. So how many days of inventory should be ordered for the optimum utilization of resources? What is that level of inventory or order which gives you the maximum contribution? So this is something which we will learn also later. Then performance measurement. Accessing a range of insights enables balanced assessment of organizational performance, avoiding undue emphasis on readily available data. Okay. So you do a balanced assessment of the performance, and then, so whatever is readily available, you can avoid focus on that. Did you understand the benefits? All right, perfect. Next, we have challenges and risks of data analytics. Again, a lot of legal disputes have happened because of this. We'll cover those points here. Let's see. So despite the examples of the use of big data in commerce, particularly for marketing and CRM, there are some potential dangers and drawbacks. Cost. It's very costly to maintain big data and the corresponding database for it. So establishing the necessary hardware and analytical software, because if you keep collecting, it's of no use. You need to have softwares in place which are able to take the dump out of that data, right? So having analytical softwares can be expensive, although costs are decreasing over time, but still it is a costly affair. Then time and resource consumption. Analyzing which data is crucial for the organization and its potential impact can be time consuming and resource intensive. And regulatory concerns. So I was telling you a lot of legal disputes can also happen. So some countries and cultures have concerns about data collection, leading to regulations governing its collection, storage, and usage. Non-compliance can lead to severe reputational and legal consequences. A lot of companies have been asked to pay hefty fines for non-compliance with these policies. You might have heard about such news every now and then. Then data loss and theft. Apart from legal repercussions, data breaches can result in civil legal actions if individuals suffer harm due to data theft. Okay, you'll have to pay compensation to them. Then incorrect data. See, remember I told you veracity is the reliability of data, that it is correct. So incorrect data, inaccurate or outdated data can lead to erroneous conclusions and decisions. So if the data is not correct, or if it has been collected erroneously, then the decision which you're going to take out of it, that will also be inaccurate. Overfitting. There's a risk of identifying patterns in data that are not meaningful or applicable to other data sets or any type of predictive analytics. So, you might just be collecting over data and then you're making unnecessary relationships that will give you no value. So that is a challenge with big data, that you're trying to identify unnecessary patterns, overfitting you're trying to do. So those are the challenges, right? So pretty simple. Big data is an important topic. The 5 V's of big data are important, right? So let's take a break now. And post the break, we will continue with this discussion. Say first 1 or 2 chapters now, they're purely theory. Try examples as possible so that you don't get bored. But it's a good practical paper also, so we'll be solving a lot of questions, but hold on for a few chapters. Okay? So eat something and refresh yourself, be back, and then we'll continue our discussion. 20 minutes, we'll break for that. Hello everyone, welcome back from the break. Let's continue our discussion. So the next section which we have is about data visualization. Okay? So data visualization is the graphical representation of information using charts and graphs and maps to make complex data easier to understand and analyze. See, if you present a lot of data in text form or in tabular format, it gets a little overwhelming, right? So data visualization techniques are used in that case. Its goal is to summarize big data in a format that is accessible to non-technical users and facilitates the identification of trends, patterns, outliers, and comparisons. Effective data visualization communicates insights compellingly with an appealing design that enhances understanding. Different visualization techniques are used based on the nature of the data and the intended audience. Once data is cleaned and organized meaningfully, it can be presented in a user-friendly format for effective communication and decision making. So the first one is tables that we all, like. So for example, this table only. If you see, this is our text table, but still, when data is presented to you, this book also, you will see that a lot of tables have been made. Why is it so? Because it is easier to, see and remember. Whereas if it's the same thing, I would have put in paragraphs. Okay? It might not have been so eye-catching, but now it is. You just look at the heading, you read the text, right? So that is what tables do. So when creating tables, it's essential to ensure that they fit on one page for user-friendliness and full visibility. Any data source should be acknowledged on the table itself. Here are the guidelines for producing tables. Include a clear descriptive title. Provide heading for each column. Label each row for clarity. And highlight totals or key figures using bold formatting. Example, tabulate of budgeted profits, costs and revenues of different sales at Winston's football factory. So sales volume, these all are the number of footballs. And what is the profit? So what they have done is sales revenue, material cost, labor cost, production overhead, variable fixed, non-production overhead. All of that they have put in tabular format. Now imagine if I give so many numbers to you in text way, in a text format, in paragraph. How lengthy and clumsy it would become, no? So that is the importance of table, that it helps to tabulation of data and making good analysis out of it. So now you can understand that, okay, for example, the highest budgeted profit is achieved at the 5,300 number of units. So this type of analysis is being possible only because it has been prepared in a tabular format. If it was prepared in a text format, then you would not have been able to make such derivations or conclusions. So next is charts and graphs. So charts and graphs tables are helpful ways quickly highlighting relationships and trends within data. So you would not make these charts in exam. See, tables you will be required to make, but charts and graphs you will not be required to make. Right? So, line chart. What is a line chart? Line charts are useful for showing trends over time, such as sales revenue growth. So what has been the growth over the time, period? So that is useful. That can be visualized using a line chart. Next is bar chart. The bar charts help show comparison, for example, comparing budget revenue per month against actual results. So you can see. So let's say you've plotted the budgeted revenue here and actual revenue here. So this type of a comparison is good. So that's a bar chart. Next is pie chart. Pie charts can show a relative comparison to a whole. So let us say I have 100 rupees. Out of that 100 rupees, I've spent 10 rupees on shopping, 10 rupees on electricity, 10 rupees on medicine. Like that, out of the whole, what I've shopped where or what I've expensed where, that can be understood from a pie chart. It can show a relative comparison to a whole, such as sales in different regions. Then scatter diagram. A scatter diagram or scatter graph is used to plot pairs of numerical data with one variable on each axis to look for a relationship between them. If the variables are correlated, the points will fall in a straight line. Okay, so that we will learn later in chapter 9 under the topic of correlation. So these are the different presentation techniques. Now, the following elements are crucial for effective charts. There should be a chart title, name of the chart describing its content and purpose. Then labeled axis, define the axis of the chart. Legend, that means axis of the chart is what? For example, this one. Like these are the axes. Then legend is provides context data points displayed on the chart. So I'll give you one example. So when you would have made maps of India in your class 5, 6 geography classes, remember we used to give a key that, 1 centimeter denotes, well, let's say 1,000 kilometers, right? So what is that? It is a key. It is a legend to any chart. So similarly, here it could mean that, let's say 5 centimeter means 1,000 rupees. Okay. So that is legend. Then grid lines of the chart to assist the user in comparing data points to axis. What it means is, for example, here, so these lines, the back lines which you're seeing, these are grid lines. So that a user can actually, plot. So for example, it is this value. So he doesn't have to manually draw lines. This particular grid line will help the user to understand, okay, my sales is this much. So that is the grid lines. Now I have an activity for you. I've got 5 different varieties of information. You have to select the most appropriate format in which to present the information given in each scenario. Okay. So giving you 5 minutes, read through each sentence and tell me the format which is suitable out of these. Okay. So everyone, please try. This is actually simple. Please try and let me know when you're done. I've got a lot of answers. Let's check. Good work. We'll have a look and then see your answers also. So a product manager wants to understand how production costs respond to changes in activity. So that would be a line chart. Correct. Then management has just received the final figures for actual material price cost last year and wants to compare them to the original budget. So what did I tell you? You'll have to use a bar chart over here. The third one is a sales director wants to know which product segment contributes the most revenue relative to the total revenue for the period. So I was giving you the example of expenses. This is an example of revenue. Then management wants to present the results of a detailed survey of inventory cost for different products, showing the current month, prior year, and percentage changes. So many columns will be needed. So therefore, you will need to use a table. A factory supervisor wants to compare recorded employee time spent on producing each unit of a product and its final quality score to determine if there is any link. So that will be a scatter diagram. So let's see. Line bar. Aditya got it right. Rizwan got it right. Very good. Kushi got it right. Nishwa got it right. Vedant got it right. Vartika got the fourth one incorrect. Bar. See, bar is more suitable for this one. So that is why, putting bar will be better here. And then, yes, most of you got it right. Can you please explain scatter diagram again? Sure. So what is the scatter diagram? Anyone else also having any query, please let me know, okay? So I'm explaining the scatter diagram now. Everyone please listen. So let me. Let's come to Excel and let's plot a scatter diagram on our own. I'll give you some data. Hold up. So let us take height and weight. Let's say in inches, height is in inches, and weight is in kgs. So 60 62. Okay, we have taken this. Now weight is, that is so 55, 57, 59, or 58. Then 64, 69. Okay. Then 75, 78. I'm putting random numbers right now. 82 and 83. Okay. So this is a random number table that we have created. Now let's plot it. Excel. Let's begin with charts. See, scatter. This is how the scatter diagram has been plotted for this. Height. Height is being plotted over here. It's not reflecting the axis over here. Chart title, axis title. What are these? As this is the height in inches. This is the reach in inches. Okay. This is what a scatter diagram looks like. So now, this example, you read the explanation once again. A scatter diagram is used to plot pairs of numerical data. So you saw what did we do? We took pairs of numerical data with one variable on each axis. We took height here, weight on the x-axis to look for a relationship between them. If the variables are correlated, the points will fall along a line. So here, the height and weight were correlated, so they were falling along a line. But let's say I take some other variable, some uncorrelated variables, then the scatter diagram will be all over the place. The dots will be all over the place. So that is a scatter diagram. Did you understand now? Those of you who were asking about scatter diagram, is it clear? Perfect. Then in the similar way, let's make I think there were another doubt, right? Scatter diagram is done. Pi also, no? Let's cover pi also in the similar way. Pie chart. So let us say we are plotting the market share of companies. Okay. I'll come back to your doubts. I'm first explain the concepts and then I'll come back to your doubts. Let's make a pie diagram of market share. So this is company A, B, C, E, E. Okay. And here we write market share percentage. So that is 25, 35, 20. How much is left? 10 out of the 10. Now let's make a pie chart of this. Insert recommended chart. See, first recommendation itself they are giving is pie chart. So this is your I'll come back to those. Is it clear now? Are you able to understand pie charts now? So company A is having 25. Sorry, company A is this one, 25. Then B is 35. C is 20%. Then both of these are having equal pies. Yeah. So pie and scatter diagrams are done. Then let's discuss the other ones also. Let's draw it ourselves. Let's discuss a few examples. So first one was what? Line charts. You don't have to do it from exam point of view. They'll give you the charts wherever needed. And line chart, we will use year and revenue. Okay. Year 2020. Revenue is in crores. 100, 125, 180, 162, and 210. Make a graph of this. Insert. So line chart. Okay. So this is the line chart for revenue. Right? Similarly, next was what? Pie chart is done. Next is bar chart is left. No, let's discuss bar chart also. bar chart. So, your budgeted profits, actual profit, source, source, your yes. My budgeted profit was 25 crores. I made 21 crores. Budgeted was 45. I made 54, 53. Then here it is 68. I made 68 only. Then 23. My target was 75. I made 102. My target was 110. I made 102. This is the data I have. Yeah. Now let's plot a graph for it. So this is the profit. Are all the diagrams clear to you now? I've covered all of them with examples here. All the ones are clear. So this is how you can present the data in graphical format. Now I'll go back to your doubts. Scatter diagram done, pie and scatter done. There can be link in activity level and production cost for scatter. Let me see what was the statement. A production manager wants to understand how production costs respond to changes in activity. Yes, this can also be plotted on a scatter diagram. You're right. This can be plotted on a scatter diagram. Correct. Then next one is, remember in real terms, we mostly use funnel and combined curves. And line for comparison, do we have to answer? Nothing like that. Funnel, see, different graphs are used in like the syllabus. We have talked about 4 very simple diagrams, but there can be other types of diagrams also. These are not the only 4 types of diagrams, but different types of diagrams can be used. Vartika for you. Okay. Do we have to answer in these 4 limited options, as there are others as well? So you have to stick to these 4 because they were given here that you have to select out of these. So that is why mostly when it comes in the exam, you will be given it like in the form of drop down list. In point 1, we are analyzing impact of one on another activity. Yes. So, but in scatter, we need 2 variables together. So those will be the 2 variables now. One will be activity level and then the production cost. So in that ways, we can plot it in a scatter diagram. So in for the first point, let's just come back over here. A production manager wants to understand how production costs respond to changes in activity. Now, one thing which you can actually refer to over here is the manager is wanting to understand how the production costs will respond, right? So let's just come back over here. We have given the answer of line chart, right? That he can understand it through a line chart. He can plot production level and the production cost. Similarly, very similar to this way, we can plot a scatter diagram also, right? So in this way, you can plot a scatter diagram as well. So both of them are fine. Understood, Nancy? Because line diagram and scatter diagram, they are actually similar, and they can be used. Both of them can be used for the first one. The use case of scatter diagram will come in case of unrelated data. Okay. Actually, it is more about using using it to plot unrelated data. Let us say height of the mountains and traffic on the streets of Delhi. Height of the mountain, let's say height of different mountains, and traffic on the streets. These are completely uncorrelated data. So in that way, scatter diagram will show that, okay, these are unrelated data, so the dots will be completely scattered. So scatter diagram is used to understand any type of correlation. Okay. Whether there is any correlation, that is something that you can understand out of a scatter diagram. Yeah, please tell me. Point number one, they are keeping variable to changes in activity and studying the impact on production. Yes. And in the point number five, they are studying both the variables together. That's okay. That's still okay. So I'll tell you. Let's just go back to the definition once. Line charts are useful for showing trends over time, such as sales revenue growth. And here we saw what? For plotting pairs of numerical data. Here also the trend will be against what? Year and the number, right? So here also we have a pair of data only. So don't get confused. These are similar things, but line charts are more used to understand the trend in the data, that how the numbers will go over time. And scatter diagrams are more from the correlation point of view, which we will see later also in chapter 9. So in both of them, they are using pairs of data only. Scatter diagram also and line chart also. It's just that the objective with which they are used. So if you just come back to Excel now, let's see. See, multiple recommended charts. I just use this data. If you see in Excel also, they are recommending scatter diagram also, and they are recommending a line chart also. So it's not like anyone is right or wrong. It's just that the objective with which a person would be making it, that makes all the difference. Okay, here we are seeing this also, like height and the bar diagrams can also be used. So it's not like any one chart is right or wrong. It's just that what is the objective with which you are making it. If it is to understand the correlation between the variables, then it is scatter diagram which is used. If it is to understand the trend of the data, that is, if you understand, okay, this is the trend line. So let's say if it was share price, you can use these trend lines to predict the share price in the next 1 year, let's say. So that is the expectation of line chart. But here I am not making this to draw the expected weight at 100. I'm just understanding the correlation of the data. That is how you have to interpret it. It's nothing wrong or right. It's about the objective with which you want to make the diagram. I hope it is understood now. Let me know. Yeah. All right. So with that, our first chapter is done. what I would want you to do is if you just scroll back to the end of the book, so you'll be getting the remaining pages also very soon. So first chapter questions are already inserted over here. So page number 262, okay. So a lot of questions are there for practice. Like objective test questions are also there and section C type of questions are also there. So everyone, please do practice these questions and follow this practice for all the chapters. Whenever we complete a chapter, you go towards the end of the book, you'll find chapter-wise questions given to you. Please practice them. And wherever you get stuck, any point you don't understand, please raise it to me in the class. I will discuss that question. Okay? So just keep your doubts noted. So during the next 1 week, let's say you're practicing these questions. A lot of questions are there. It will take some time. So during every day, you take out some time, practice some questions. And wherever you get stuck, please note down the question number. And whenever we meet next on Saturday, at the beginning of the class, you can tell me, ma'am, please take up these questions. I'm not able to understand. I'll take them up. But it's important for you to practice. Okay? So please do solve these questions at home during the week. Right? So chapter number 1 is done. Now let's move to chapter number 2. So similar lines we will develop further on, performance management. So that was all the basics, information, presentation of data. So that is what lays down the basis for performance management. Now what we will understand is the different aspects. Cost accounting, management accounting, financial accounting. All of that we will understand now. This is also a pretty simple chapter only. And now, since the chapter is over now, I will share across the notes also. This time, for chapter 1, there was not many notes, just video links and a few diagrams that we made. Wherever, needed, we will keep adding the notes. So you'll get the notes for chapter 1 and share it with the team. So probably tomorrow, they will just upload it on the Google Drive and you can download from there. Okay? All right. So we are in chapter number 2. This is actually a very interesting chapter. Now we will start off with the practical questions also. So really interesting. Now, management accounting and financial accounting. Management accounting focuses on providing accounting information to aid management in planning, controlling, and decision making for the business's operations. Okay, so you are providing. I hope you understood that the purpose of management accounting is not to meet any statutory compliance, but it is to provide the relevant information to the management team. Okay. So financial accounting, on the other hand, is focused on preparing and presenting accounting information that reflects the business information, so business performance and financial position. So those are financial records. So management accounting is customized reports which helps the management to take decisions, and financial accounting is prepared from the compliances of accounting standards, relevant IFRS, and to understand the business performance through the P&L statement and the financial position through the balance sheet. So that is management and financial accounting. Users of management accounting information is management. Here it will be shareholders, banks, lenders, and suppliers, potential investors, tax authorities, and governments. Now, you please tell me, what do you think is going to be used in performance management paper? Management accounting or financial accounting? What are we going to learn? MA or FA? What is the objective of the performance management paper? We are going to be learning management accounting. Okay. FA will be the base for FR students, the financial reporting students, right? Format of information, it can take any form, whereas financial accounting is regulated by law and by the profession through IFRS. So you have to stick to IFRS. Now, this is also, this point, it can take any form, is also the reason why you will see that In financial reporting, you'll have a standard layout that the P&L statement is to be presented in this way, employee benefit costs and all of those interest finance costs. So there is a proper format in financial accounting, and then there is a set answer only that this is the answer, because there are rules around it. Management accounting, on the other hand, is a little open-ended, similar to financial management. Okay, so those of you who have studied finance from me, you will know that I keep telling these statements, that there is no correct or wrong answer. Of course, I mean, while the way I teach you that this is the way it has to be solved for the exam purpose, you will get the same answer. But in real life, now please understand, there is no such format or any prescribed rules to solve. There are concepts, but again, due to scenario based, they can be tweaked a little. So that is why multiple times you will see that, okay, if I can use this method also, like I can, for those students who have come from the finance background, that we can use dividend valuation model also for valuation of a company, and we can use the discounted cash flow method also for valuation of a company. So objective is same, valuation of the company, but you can use different methods to arrive at the same thing, right? So in the same way, in the performance management paper also, we are preparing the reports to give it to the management. So it's not like there is only one way to present it. It can take any form and manner. Purpose of information is that useful to plan, control, and make decisions. Here it is stewardship and investment decisions. Stewardship means that is, from a business point of view, how you want to take your business ahead. So stewardship and investment decisions. Whereas here it is planning, controlling. Then basis of valuation, here it would be relevant cost. We are going to learn a lot about it, relevant cost. And here it is going to be historical cost. Okay, historical cost means the cost which has been incurred in the past. So you record your expenses, assets, all at historical cost now. So that is under financial accounting. Under management accounting, you're going to learn the concept of relevant cost. Very, very important concept. We learn about it in a lot of details. Now, planning, controlling, and decision making. That's what we learned. Is the objective of management accounting. So they involve setting goals and assessing the strategies and measures needed to attain these goals. Okay. So planning involves defining objectives and choosing the methods to achieve them. As businesses grow, these processes become more structured. Short-term plans like an annual budget outline specific goals for the upcoming year in detail. Long-term plans, often termed strategic plans, outline a business's long-term objectives in document form. Next, we have control. So control involves ensuring that the organization is on track to achieve its plan. So control involves ensuring that an organization is progressing towards its short and long-term goals and taking corrective measures if deviations occur. Long-term control includes evaluating strategic performance to assess how well the organization is meeting its strategic objectives. And short-term control involves comparing actual results with budgeted ones, typically through operating statement that analyzes variances in detail. Then decision-making. So decision-making often relies on information from the costing system. So for instance, an organization might use this information to determine the suitable price of a contract bid. We are going to learn all of these things, okay? So we'll come to decisions that what should be the price that should be kept for the product. In that we will be doing these pricing strategies also. Very interesting paper, I'm telling you, you'll learn a lot of things. Or to evaluate the financial viability of outsourcing a crucial components production. What it is meaning is whether you should make a particular product in-house or you should outsource it to some subcontractor. So all of those decision making you will learn in this paper. Are you with me so far? Anyone having any doubts? Management accounting, financial accounting, what is the purpose of management accounting? Is it all clear so far? All right, perfect. So let's move to the next topic then. Next we have here is marginal costing. It's a very important topic again. So let's build it up. Okay, one moment. Let me see if I can show you something good here. How many of you have studied economics? You will be able to relate to it very easily. Let's come to Excel only. So let's come to Excel. Sure, all of you would have studied some, but some may recall, some may not recall, but all of you would have studied it. Marginal cost, marginal revenue. First of all, answer me a few questions. What do you understand by variable cost? What is a variable cost? Yes, 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 Sneha. What do you understand by variable cost? Cost which changes as per the production levels. So, cost that change in direct proportion to the level of production. So we're talking in terms of production. And fixed cost will be what's the examples? What are the examples? Example would be your raw material, then labor. These are variable costs, right? Next, what is fixed cost? What is fixed cost? Costs that remain constant regardless of the level of production. Okay. So, what are the examples? Example here would be rent, right? Rent, then insurance. All of these are fixed costs. Okay. Now why are you explaining us variable cost and fixed cost and marginal costing? Because marginal costing is also known as variable costing. Okay. Marginal costing is a concept which is used to analyze and make decisions based on the costs associated with producing one additional unit of a product or service. So tell me, which cost gets incurred with every one additional unit of product? The variable cost, right? Fixed cost will remain same. With every one additional unit, you're gonna incur only the variable cost. That is the reason I've explained you or discussed the concept of variable and marginal costing. So what is marginal costing? Now let's discuss that. Marginal costing. So what is marginal costing? Marginal costing is a concept used to analyze and make decisions based on the costs associated with producing one additional unit of college. Okay. It focuses on the cost incurred use one more unit. Okay, one more unit, emphasizing the variable costs that change with production levels. So there is emphasis on variable costs in marginal costing. So now you come back and read the explanation given in the book. It will make sense. So under marginal costing, fixed overheads are excluded. They're not even considered. Fixed overheads are excluded from unit costs and are considered a period cost. Period cost, that means they will remain constant. Expensed entirely in the statement of P&L. That is, when you are preparing the financial accounts, then you will consider it as a cost. But in marginal accounting, I will not consider. And inventory valuation accounts for only the variable cost of production, excluding fixed overhead. Is it clear? Did you understand the concept that the fixed costs will be excluded? Why? Because this says that if you make one more unit, what will be the cost incurred? So that is marginal costing. Okay. Next concept which we have here is absorption costing. Let's first understand it. Sure. Absorption costing Absorption costing. It is also known as full costing. Absorption costing is the concept. The concept. Okay, so the concept that captures all manufacturing costs or captures all manufacturing costs, both variable and fixed. Both variable and fixed when calculating the cost of a product. Okay. This approach, it focuses on a comprehensive view on the, or you can say it focuses on the total cost of the product, including all overheads. Including all overheads, not just the variable. Okay, is it clear, everyone? Are able to understand? So absorption costing is a concept that captures all manufacturing costs, both variable and fixed, when calculating the cost of the product. It focuses on the total cost of the product, including all overheads, and not just the variable costs. Okay, and now if you come back and read the notes from the book, you'll understand. So under absorption costing, fixed production overhead costs are allocated, apportioned, and absorbed into the cost of units produced. So you're finding out the total cost of the product. Now please understand. Variable cost is something which you can associate with each product. Okay, that this cost has been incurred for this product. But can you do so with the fixed cost? Can you say that, okay, this much rent has been incurred for this unit of production? Can you do that? That out of the total rental space of the factory, this much rent is for this product. Okay, that can you allocate that? Can you identify it? Is it identified at the cost? Identifiable? No, we cannot identify. So what we do in that case? But we have to find out the total cost of the product. So in that way, in that case, what do? We allocate it. We apportion and absorb it into the cost of the units. It's not possible to identify, although it is possible to identify how much raw material has gone into each final product. Like, for example, you can visually see that, if you're talking about a car, that 4 tires have gone into the car. So for the car, tire is a direct raw material only. But can you do so with how much rent has gone into the making of the car? We cannot do that, right? So that therefore, we have to do absorption costing, under which we allocate or apportion the cost and absorb them into the cost of the units produced. So allocation is what? When overhead costs are incurred, they must be allocated to the respective cost centers to which they pertain. Costs associated with a specific cost center are allocated directly to that particular cost center. Apportionment is the process of allocating overhead costs that are common to multiple cost centers among those cost centers using an appropriate method of allocation. So maybe you will just divide with the number of units. Something like you'll try to find out a base on which you can allocate that total cost on the number of units. So example 1, apportionment. rent, rates, heat. Maybe you can apportion it on the basis of floor area. Then supervision, canteen costs, that can be apportioned on the basis of number of employees. Then depreciation, plant insurance, all of these can be apportioned on the basis of the value of the plant. Next, we have reapportionment. So, overhead costs allocated to service cost centers must be reapportioned to production cost centers. This process involves selecting an appropriate basis for reapportionment. So, what you're doing, let me just break it down for you. So, you have a big factory, okay, and there are different cost centers. So, there would be some overhead costs which will be easily identifiable to the cost center. I'm not saying product, I'm saying that a particular cost can be identified to particular division, department, cost center. Okay. And then there are some service divisions like maintenance department. It provides service to the different departments, production department, right? So those service related costs or maintenance costs have to be reapportioned to the proper cost centers. That is what it's saying. So overhead costs allocated to service cost centers must be reapportioned to production cost centers. This process involves selecting an appropriate basis for reapportionment that accurately reflects how service departments support production department. I'll give you one relatable example. So let's say we are talking about Flipkart, right? Now in Flipkart, there are different divisions. I'll give you examples. Mobiles division, then TV, then laptops, right? Then, the small appliances category. So there are different divisions. So each of these divisions will have their own costs, right? That is identifiable to the cost center. I'm not saying to the product, but they can be identified that this cost pertains to this particular division. But then there will be a customer service cost, which the customer experience team is, incurring. But don't you think it is providing a service to the divisions only? Is it creating problems on its own that it is solving? No. It is solving the problems which have come out of the mobiles division or the laptops division or the TV division. So what it is saying is the costs of the customer service department will be apportioned to the laptops division, to the mobiles division, different. So it is getting reapportioned. Although the costs are identifiable to the customer service department, they are apportioned over there, but they will get reapportioned to the respective cost center. That is what is happening over here. Read it with me again. So overhead costs allocated to service cost centers must be reapportioned to production cost centers. This process involves selecting an appropriate basis. So maybe in our example, the base could be the number of calls pertaining to TV division, number of calls pertaining to laptop division, number of calls pertaining to mobile division. So we have to find some basis for reapportionment that accurately reflects how service departments support production departments. Are you able to relate with the example I've given you? So common bases can be there, which are, they have given from a production point of view. I gave you from a service point of view. So there could be different bases like labor hours, machine hours, parts, number of parts you have used, utilization of variable overheads. So all fixed costs allocated to service cost centers will subsequently be reapportioned to production cost centers for absorption into cost units. Please tell me, are you able to understand so far? Any doubt? Allocation is what you have done the allocation of cost to the respective cost centers. Allocation of mobile division cost to the mobile division, laptop division cost to the laptop division, so on and so forth. So that is allocation of the cost. Then apportionment is what? The total cost of a particular division divided by the number of units produced by that division. Okay, so that is apportionment. Here, the cost of the service department that gets reapportioned to the production departments. That is what we have studied so far. Please take a look. Let me know if it is fine. Any doubt, anyone? Take your time, no hurry. Please go through it. Let me know if it is fine. Any doubts? Rayan says, why can't we take customer center as it is in total cost? So wait, listen to me. Now let us say Flipkart is not selling the products directly, it is a aggregator. But for example, and if you want to continue our example only, or you can consider it as some other conglomerate company. Now think about it. You are going to price your product. Okay. So Flipkart, let us say Flipkart is the manufacturer. It is not, but just saying, for example, now Flipkart is the manufacturer. Okay, it will have to price its product. It will have to determine a selling price for its product, right? Now, when it has to determine a selling price, we will, if we are using absorption costing, that means we have to allocate the total costs which are incurred to every unit of production for every mobile. I have to have a cost to it. Then only I'll be able to determine a selling price, right? I have to please understand pricing is done for each product. Okay, let me show it to you with numbers. Hold on. Let us understand through an example. Example. A company manufactures 3 products: mobiles, laptops, and TV. It incurs the following overheads. One more thing is products, units, product is mobiles, laptops, and TV. Number of mobiles produced is 10,000. Laptop is 7,500. TV is, let us say, 2,500. Just pause me wherever you don't understand right now. So, number of units manufactured is like this. Okay. It incurs, so there will be some direct costs. I think I'm believing that there would be no doubt in the direct cost, right? The variable cost, there would not be any doubt. It incurs the following overheads I'm discussing. Overheads part. Yeah. So it incurs the following overheads. Mobiles division, I'm saying. Wherever the mobiles are getting manufactured. Mobiles division. Laptops division. And TV division. Customer service. Here. Dollars. Let's say, let's discuss again. Rupees only. Rupees 10 lakhs. Here some 4,50,000. TV division incurs some 7,20,000. And customer service total cost which has been incurred is some 3,25,000. Okay, I've taken random numbers. One more thing, let's add here only. Direct cost per unit. Let us say each mobile is sold for 10,000 rupees, laptops for 25,000 rupees, TV is, let us say, for some 15,000 rupees. Prices its product on absorption basis with a markup of 20%. So these overheads have been incurred. Now let us do allocation of the costs. Okay. Customer service is given. And one more data point is there. Division. A number of customer complaints. Yeah. Mobiles division is receiving 200 complaints. Laptop is receiving 350 complaints. TV is receiving some 400 complaints. Okay, these are the number of complaints which have been received. Is there any doubt in the data so far? Are you able to follow? Markup is profit. I'll come to that. So any doubt in the data? Markup is profit only. So is this fine? Data, any doubt so far? Yeah, perfect. Now I have to find out. Question is, find out the selling price per unit of each product. Okay. How would we do that? I have the direct material cost. I have the mobiles division cost. And respectively for each division, I have one more cost, customer service cost. What would we do? Okay. Let's make a product direct cost per unit. That would be 10,000, 25,000. Okay. Then overheads allocation. Allocation is already an absorption. Overheads absorption. Can you tell me how can I absorb the cost of overheads here? Can I say 10 lakhs divided by the number of units? Can I do that? 10 lakh divided by the units produced, correct? Similarly, for laptops, it would be 4 lakh 50 divided by 7,500. Here it would be 7 lakh 20 divided by 25. So this is the overhead absorption for the respective divisions I have absorbed. See, it doesn't mean 100 is identifiable to each mobile. It is that total 10 lakhs cost was incurred in the department, out of which 100 is getting allocated or absorbed to each one mobile unit. So this should be my total cost, right? This should be my total cost. Yes or no? I should be charging a markup on this. Markup will be this into 20%. And my selling price would be this, right? As per the logic shared by Emu, this would be my total cost. And then therefore the selling price. This should be my answer. Please tell me, is it okay? Everyone confirm? Rehan is saying no. What about others? Do you think this is fine? Customer service cost is of customer department. I don't care. I'll just allocate mobiles cost to mobiles, laptops cost to laptops. Is this fine? It is not fine. Customer service cost also has to be allocated to the respective products, because it's not like customer service cost or customer department will earn something extra. This cost has to be allocated, or it has to be reapportioned to the products. Okay. So what will I do in that case? Total customer complaints is how much? 1,000. And customer service cost is 3,25,000 rupees. So cost per complaint would be what? 325. So what will I do? 200 multiplied with 325. Please tell me, is it fine? Total cost 3,25,000. You can see it got allocated. What have I done? I have reapportioned the customer service cost to the different divisions, and now I'm gonna allocate it. So customer service cost, this will now become 65,000 divided by how many units? 10,000. Now you tell me, are you able to understand what has happened? All the steps which were mentioned in text, it gets covered here in numbers. This should be my selling price. Understood? So Rehan, do you agree? Can we now, to answer, will you be able to answer your own question? Can we take customer cost as it is in the total cost? If I take it, you saw na, I'll not be able to recover it from the customer. It becomes my hit. I don't want that. I will recover the customer service cost also from the customers, right? So Sneha, what I have done is, these were the total number of complaints. 1,000. It is a sum of these. Okay. Total number of customer complaints were this much. 1,000. Total customer service cost was 3,25,000. It was 3,25,000. So what did I find out? That cost per complaint is 325. That is 3,25,000 divided by 1,000. Now, mobiles division in total had 200 complaints. 200 complaints into cost per complaint is 325. Then similarly, 350 complaints were there for the laptop division. So 350 into 325. Similarly, here it would be what? 450 multiplied by 325. So this is the total cost of each division. Now I have to find out the price per unit of the product, right? So what will I do? Total cost divided by the number of units. That is what I have done over here. Take a look. Let me know if it is fine. Any doubts? Clear? Perfect. So this is the cost. I mean, we have found out the selling price for the product. I hope the concept is now clear. If we read that part again from the book, you'll be able to understand it much better now. Read it again. Overhead costs allocated to service cost centers must be reapportioned to production cost centers. This process involves selecting an appropriate basis. What was the basis for us? Number of customer complaints. So this process involves selecting an appropriate basis for reapportionment that reflects how service departments support the production departments. Common basis will be, it will be always given to you in the question, whichever base. Yeah. In our example, we took the base of number of complaints, but it will vary from question to question. So this is what a reapportionment talked about. Right? All fixed costs allocated to service cost centers will subsequently be reapportioned to production cost centers for absorption into cost units. Right? Rehan and everyone else, is it clear now? Please confirm. Yeah? Perfect. Now the absorption of overheads. So here in our example, what did we use as the base for absorbing all the overheads? We just simply divided by the number of units, right? Whatever was the total cost, total overhead or the total service, customer service cost, that was in totals, we just divided by the number of units to find out the cost per unit. But there could be different bases. So the number of units is not the only base for absorption of costs. There could be different bases. The basis could be labor hour, the material cost rate, labor cost rate, prime cost. What is prime cost? Anyone knows? Sum of all the direct costs, like direct material, direct labor, direct expenses. The sum of all the direct costs is known as prime cost. Then different base could be there. Machine hours could be used. Then unit of output. How many number of units of output which we used? Units of output we were using to apportion or absorb the cost. Now, so that is, these are the different bases which can be used. Overtime cost is not included in the prime cost. It is treated as an abnormal cost and therefore treated separately. Okay. All right. Now, before we move to the example, I want to discuss few basic concepts with you, not directly related to this topic per se, but just as a general discussion I want to have, because it will come handy in all the chapters and all the calculations. So just to, prepare you for the question solving. Simple concept I want to test with you. Ask you a few questions, you can answer me. I mean, you will obviously be knowing all of this. Just want to revise these concepts. Example. Cost is 100. Markup is 20%. What is the selling price? What is the selling price? 120. Correct. Very good. That is 100. So can I do into 1 plus 20%? Can I do that? Can I do 1 plus 20%? Or no, I should do what? First, let's go for the long way. I'll not do it like this. First, I'll calculate the markup. Markup is 20% into 100. Right? Then I'll add the selling price. Cost plus 20, which is 120. This is, of course, one thing I can do. But now you're growing up. You have to go ahead in the professional careers also. So now start learning the advanced, very simple but advanced things. So what you should do is selling price is you can use, if you want, if you think about it, what is happening inside this formula? Can I say what is happening inside this formula is 100 plus 100 into 20%? This is what is happening inside the formula, right? Can I write it as 100? Simple maths, class 5 maths. 1 plus 20%. Those of you who have studied FM from me, please don't get bored. I know I've discussed this earlier. But for everyone who is attending it for the first time with me, selling price, can I write it as this? Right? So can I say this is nothing but 100 into 1. So that's fine. So this is selling price 100. Can I definitely, instead of following all the long steps, name my selling price like this, 120, right? That is what I was doing earlier. Okay. So next, let's take one more example. One more example, let's take. One more example. Cost is 100. Margin is 20%. Let's give a simpler example first. You have to tell me what is the cost. Selling price is 100, margin is 20%. You have to tell me what is the cost. 80. Simple, right? So cost, what I would do is margin, longer process first. Margin is 100 into 20%, 20. So cost would be 100 minus 20. This is the long way. But inside the formula, what is happening? 100 minus 100 into 20%. This I can write as 100 1 minus 20%. So simply what I would do is 100 to 1 minus 20%. So that is 8. This is my answer over here. And this is my answer over here. Yeah, pretty simple example. Ma'am, why are you teaching such simple things? Let's try to twist it a little. Those of you who have studied FM will know this already. Now selling price is 100. Markup is 35%. What is the cost? 32%. What is the cost? Vartika, you can't make this mistake. Please see your calculation. Just one basic thing. Always remember this. Markup is applied on cost and margin is applied on selling price. Just remember this. Now, can I do cost or markup as 100 into 32%? The answer is no. This is wrong. This is wrong. This is not right. 32 is not right. Right? Then, ma'am, what is the right answer? So here, please remember in your mind what you should do, and then we will make a derivation out of it, which we will use forever going forward throughout our classes in PM, FM. We will keep doing this. So in your mind, please take that value. Everyone, please pause. Stop your calculations. Please pause here. Whatever percentage this markup or whatever value, let's do it. Let me write here. Whichever value the percentage is applied upon, assume it to be 100. Okay. Step number 1. This will start happening automatically in your mind. See, the reason I'm discussing it so explicitly, students make mistakes over here. But we'll just make a small formula that you can use in any ratio proportion question, not just in markup margin, but in any type of ratio proportion question. So please pay attention. Even if you know the calculation of markup margin, be careful over here. So whichever value the percentage is applied on, assume it to be 100. Now markup is applied on what? Markup is applied on cost. So let cost be 100. Then markup will be what? 100 into 32. And then selling price would be what? 132. Okay. Step 2. Step 2. You have to follow this. Given value divided by the representative multiply with the requirement. This is extremely important. Please use it. You can use it not just in ACCA, in your general life also you'll be able to use it. Practically, like I've been using it for years now. It comes handy till date in my work. So given value divided by the representative multiply with the requirement. And what does it mean? What is the given value over here? Given value is 100, right? Divided by the representative. What is the representative of selling price in our assumption? Representative is 132. What is the requirement? I am trying to find out the cost. So multiplied with this, I get 75.76. Okay. Given value by representative multiply with the requirement. Extremely useful in a lot of circumstances. Okay. So I hope you would have understood now. Just 2 steps to follow. Whichever value the percentage is applied on, assume it to be 100 and then use this formula. Given value by representative multiplied with the requirement. Okay. Similarly, now you'll be finding this example pretty simple. Let's take up cost is 100, margin is 29%. What is the selling price? Quickly. Cost is 100, margin is 29. Tell me, what is the selling price? Be quick this time. Just one answer. Why is it taking so much time? Be quick. What happened? So much time. Got few answers. Yes. Perfect. So how do we solve it? Let's apply the two steps. Okay. So here, margin is applied on what? Selling price. Let that be that. Then margin. Margin would be what? 29. So cost would be 100 minus 29, which is 71. Given value divided by representative multiplied with the requirement, you get 140.85. Okay. So that's your answer. Just remember this. We'll use it on a lot of occasions. So just wanted to discuss that in detail. Now, on that note, let's come back to the book. So this is one activity for you. Everyone, please pay attention. You all will try. X company estimates that its factory cost for the coming year will be as follows. Like material, wages, prime cost. Prime cost is the total of the direct cost and factory overhead. So total factory cost. During the year, 10,000 direct labor hours and 5,000 machine hours are available and 20,000 units will be produced. Calculate the overhead absorption rate using each of the following bases. Okay, labor hour, material cost, labor cost, prime cost, machine hour, units of output. Then management has decided that the absorption rate per machine hour, okay, that which you'll calculate over here, machine hour, is the most appropriate method of absorbing overheads. One of the products manufactured by X company is the switchit. Each switchit costs $5 per unit in materials and $10 per unit of direct labor. Making a switchit requires half an hour of machine time. Calculate the full absorption cost of 1 unit of switchit. Okay. Interesting question. We have solved one example together, right? That mobiles, laptops cost. So similar to that, please attempt this question. Should take about 8 to 10 minutes tops maximum. So I want all of you to try and let me know when you're done. Please do try. Don't sit idle. Let me know as soon as you're done. Put it in the chat box. Shivnath has solved. What about others? Time is up. Okay, Rehan has also solved. Labor hours, direct labor hours, the number of hours for which the laborers work, that is direct labor hours. The number of hours. All right, let's solve it together. Everyone, please pay attention here, okay? So we'll solve it together. First of all, what is my total overhead? Factory overhead is 30,000. I wanted more answers now. Most of you did not respond. Shouldn't have taken so much time. Factory overhead is given as 30,000. Okay. And labor hours. So now, basis labor hours. Second is material cost. Third is labor cost. Fourth is prime cost. Make the whole PNL here. Material cost. Is 40, 60, overhead. Okay, so prime cost and last is machine hours and then number of units. Machine hours, number of units, number. Labor hours is how much? 10,000. Material cost is how much? 40,000. Labor cost is how much? Labor cost? $60,000. Then prime cost is 1 lakhs. Machine hours were given as 5,000 and then 20,000. 5,000 and 20,000. So, overhead absorption rate. Then overhead absorption rate would be 30,000 divided by 10,000. $3 per hour. OM is unit of measurement. Then material cost 30,000 by 40,000 is 0.75. Material cost and labor cost 30,000. Simply I can just drag this. To 0.5, or you can say of labor cost. Please let me know if anyone of you don't understand now. Labor cost, or you can say 75% or 50% or 30% of prime cost. Then next is, I'm not dividing with 30,000, I'm dividing 30,000 by this. So the total cost that I have to recover is 30,000. No? So 30,000 divided by 10,000, 30,000 divided by 40,000, like that. Understood, Rinki? So the total amount that I have to recover, that is what I did in the earlier example also, which I solved. 325 I divided by the total number of complaints. Yes, that's the total cost I have to recover. Next is machine hours on the basis of this is 6 per machine hour. So dollar per labor hour. This is per machine hour. This is dollar per unit, $1.5 per unit. This is my overhead absorption rate. Now, next part is you have to calculate the cost of smidget, right? This is part A. Similarly, part B. Part B would be what? Materials is 5. This midget. This is 5, 10. Labor and prime cost would be 15, right? Then factory overhead. What was written? Making smidget requires half an hour of machine time. So 0.5 into what is the machine hour rate? 6 per machine hour. So for this one, it will be 3, right? And absorption cost, or please tell me if it is fine. Simple question. Anyone having any doubt? Let me know, please. No doubts? Perfect. All right, let's come back to the book. Total, no? Mishra, absorption cost is total factory cost. You can call it total factory cost only. No problem. The total cost has been derived on the basis of absorption costing. That's why I written absorption cost. You can call it total factory cost. 15 plus 3. See, normally, na, Rehan, this type of a question will come either in section A or B only. It was pretty small question, na. So you don't have to really write that much. You'll just do the calculations on the calculator and put the numbers in the answer box. Right? If it is coming in section C, then you should write. So that it clarifies what is this 3? 3 is getting charged per labor hour. 75% of material cost. So it should be specified if it is coming in section C, otherwise section A and B, though it's not needed only. Smidget part is material cost was given, labor cost was given, prime cost I calculated, factory overhead, it said that 0.5 hours are taken for each, making each smidget. So, what is the factory cost I will, take out of it? So 0.5 per unit, each unit is taking 0.5 machine hours. So what is the rate of overhead per machine hour? That is for 1 hour, the rate is 6. So for 0.5 hours, it will be 3. So the total factory cost becomes 15 plus 3, 18. Understood now? All right. Next. Next is, so we learned about marginal costing. Marginal costing, we just find out the variable cost. Absorption costing, we solve the question. Now the third very important type is the activity-based concept or activity-based costing concept, which is, important for your syllabus. That is, traditional absorption costing uses a single method to apportion all overhead costs. Basically, what it is trying to say this, in our example, factory overheads is 30,000, yes. But this 30,000 will be comprising of multiple types of overheads. It could be rent, it could be insurance, it could be maintenance costs. So different small types of overheads will make up these factory overheads total. The problem with absorption costing is that this entire 30,000 gets divided by the same base. Now that base could be labor hours, could be material costs, could be anything. But the total overheads are getting divided by the same base. So that is what the statement here is. Come read it again. Traditional absorption costing uses a single method of absorption to apportion all overhead costs between the products, typically using labor hours, machine hours, number of units. This blanket rate, so the rates which we calculated, this blanket rate can result in product costs that do not accurately reflect the true overhead costs associated with each product. Okay, this blanket rate, it does not actually reflect the true cost of the product. That is what the issue with absorption costing is. So when overhead costs were a small portion of total factory costs, this inaccuracy was not significant. However, in modern factories and service industries, the reduction in labor use and the increase in high technology have led to overhead costs becoming a significant portion of overall product costs. Thus, the inaccuracy of absorption costing has become more problematic. Now, if you do not apportion the cost correctly, then you are in a problematic situation because then you will not be able to price your products correctly. So activity-based costing aims to address this issue by identifying the activities that generate overhead costs and apportioning these costs to product based on their usage of these activities. So ABC acknowledges that traditional fixed and variable cost categorization may no longer be appropriate. With the increasing proportion of overhead costs in manufacturing, there is a need for a more accurate method to absorb these costs into cost units. ABC seeks to provide a clearer picture of cost behavior and a better understanding of what determines the level of cost, known as cost driver. What determines the level of cost is known as cost drivers. Okay. So now we learn in detail about what cost drivers are. So I hope you understood. The problem of absorption costing was highlighted. And what is the problem? One single rate is used to absorb all the overheads. The total factory overheads were getting absorbed using the common base. Same base. It could be either machine hours, it could be material cost, it could be labor cost, but the same base was getting used. That is the problem. Whereas the different components of the overhead could be getting absorbed, it could be getting triggered because of different reasons. But that absorption costing does not consider only. So that is where activity-based costing steps in. It is a more advanced version of absorption of cost. Okay, so let's learn about it. So it is based on the use of cost drivers. And what is a cost driver? What is causing the cost? What is causing the cost? That is the cost driver. So cost driver refers to a factor that can cause a change in the cost of an activity. In traditional absorption costing, it is assumed that the volume of output is the primary determinant of costs. Okay, normally what have we done? We can divide by the number of units only. However, activity-based costing recognizes that costs can be influenced by factors other than output volume. These factors are known as cost drivers. For example, the number of purchase orders processed could be the cost driver for a procurement department. So the more the number of orders that you're placing, more will be the miscellaneous overhead costs. So an activity may have multiple cost drivers as it consumes different types of overheads. For example, cost drivers associated with a production activity, it may include machine hours, floor space for apportionment of premises cost, power, that is kilowatt hour for the direct overheads, then quantity of waste and rejected output for apportionment of recycling and quality costs. Therefore, different types of overhead costs are absorbed into production units using rates based on the specific cost driver rather than a single absorption rate. So what it is trying to say that, okay, your total production overhead would comprise of human resource cost, premises cost is basically rent, then your production overheads, other production overheads, then some sort of, recycling costs. So they should be divided by different bases which are specified over here. Okay. So that is what the statement is. Therefore, different types of overhead costs are absorbed into production units using rates based on specific cost drivers rather than a single absorption rate. Okay. So different rates could be suitable. That cost per kg of material used, electricity cost per machine hour, you might be finding out. Then production scheduling cost per production order, you might be finding out. So different costs. So production scheduling cost would be there, and then you will divide it by the number of production orders. Electricity cost would be there, you will divide it by the number of machine hours. Warehousing cost, basically your rental cost is there, and then you will divide it by the number of materials which are used. So different bases could be there for different types of cost. That is what the whole intent is. So I hope you understood what a cost driver is. A factor which is causing the cost. Okay. The factor which causes the cost is the cost driver. And due to this, there could be multiple bases for calculation. Okay. So We have an activity here. 1 second. Activity. Okay, this is an example only. Now let's cover this example first. So a company assembles two models of a product, basic and deluxe. Are you with me so far? Anyone having any doubt? I'm trying to go slow. Please let me know if it is fine. You understood what a cost driver is? That here in this case, what would be the cost driver? Basically, my human resource cost is getting driven by machine operator hours. My premises rental cost is getting triggered by the floor space. That is how much square feet of floor space you have. So these are all cost drivers. Like power consumed is the cost driver for the other direct overheads. Okay. Then waste and rejected output is the cost driver for apportionment of recycling costs. Right. So these are all examples of cost drivers, which will result in different types of overhead absorption rate. What we calculated when we were using absorption costing, we were calculating the overhead absorption rates, right? Just have a look here. This, what did we calculate? We calculated overhead absorption rate. This rate was a blanket rate for the total factory overheads. Whereas this factory overheads could comprise of rent, it could comprise of, maintenance costs, all of that. So each of these subparts will have a different driver that is known as a cost driver. Clear? So, if you see here, a company assembles two models of a product, basic and deluxe, in batch sizes of 2,000 and 100 units, respectively. Okay, I think I'll just take this example later. It might be too much for you now. So let's ignore this for the timing. We'll take it up in the next class only. All right, don't worry. So we'll pause here. It's a long one, so it will take some time. We'll not be able to wrap it up so quickly. So we'll pause here. So with the basics of ABC, and I hope you understood what ABC is about. Activity-based costing. So you're going to find out the activities and then absorb the costs for it. Here, anyone having any doubt? All fine so far. Absorption costing we learned. Marginal costing we learned. Management accounting, financial accounting. All good so far? No response. Understood. Diane has understood. Others? Yeah, perfect. So then we'll pause here. Please do solve the questions from chapter number 1, the backside questions. And anywhere you get stuck, just note it down and reach out to me. I'll discuss it in the class. And please keep revising whatever we are covering so that it doesn't become overwhelming later on. And we'll meet next week on Saturday and continue with our discussion from this particular example. Okay. Thank you so much for joining it today. Bye-bye. Just 1 second. I guess Mansi has some concern. Yeah, please tell me, Mansi. I'll not share the notes in the group. I share it with the team. Okay, Sandeep, I share it with him and he uploads it on a Google Drive for which you will be able to download. So he will share across the link of the Google Drive where all the notes get uploaded. Okay, so from there you can download it. So he will be uploading it tomorrow because Sunday is off for them. So he'll be uploading it tomorrow and then you can download it. If you face any issue with respect to the download, just reach out to him. He will help you out. Anyway, that's a very simple, just Google Drive link. You can download it easily from there. Okay. All right then. Thank you. Bye-bye. Please take care. We'll see you next week. Yeah, questions you solve on your own and solve it in Excel, Word, and wherever you get stuck, Ali, you can ask me. Now solve the questions from below here. Chapter-wise questions are given. I just showed at the beginning only. Chapter-wise questions are given here. See, I think you joined late or something or what? I showed it when I completed the chapter. This book you don't have? The link of this book has been shared now? The link of this book has been shared in the group. Just please reach out to Sandeep, he will share it. Questions and answers are here. And chapter 1 questions are here. Please stick to just one source, Ali, as I mentioned in the class. Please stick to one course. It gets confusing. Otherwise, I'll also not be able to, wrap up the syllabus in the time it becomes over. And mostly now the questions are similar between the study hour and here. So don't have to worry that it is getting covered or not. Please stick to this book. Okay. Yes. You'll be getting a lot of you'll be getting a lot of questions for practice. Don't worry. Just a part of the book has been shared. This has got questions from just chapter number 1. Balance part, you'll be getting it very soon. In the next week only, you'll be getting it. So the questions from here will be sufficient. Aditya, just okay, you are not added. Please reach out to Sandeep or any person from the admin team, whoever onboarded to the classes. Please reach out to him and ask him to get yourself added in the group, because all the updates will be sent there now. So please get yourself added to and message Sandeep. And if you want Sandeep's number, just 1 second, I'll tell you also. If you want to note it down, he will add you to the group. Sandeep's number is 9599 83116. You have the contact, now. Okay. Ali, it's not possible because there are some protocols that we follow now. So for that reason, kindly just wait for 1 day, you'll get the notes tomorrow. Okay. All right. Thank you. Bye-bye. Please take care. We'll see you next week. Please do join in live classes, huh?